100 funds picking up and selling off. That's why.
Do you think, though, money flows more into other areas of ESG ETFs, like in Europe, whose policy, and I guess commitment, I mean, I say commitment because we don't really know how all the energy transition stuff will shake out in terms of allocating capital, but where it seems like it's more consistent with messaging.
100%. So Europe is still 99% of the ESG ETF flows. It's about Yeah, it's about north of 40 billion, and I mentioned US is a negative 4 billion, so a very big divide. That being said, in terms of strategy, we are seeing a bit of I want to call it an expansion, a move to climate, a move to more of the thematics, that kind of move, I guess.
Could you explain that a little bit more?
Sure. So when we think of ESG, I think of a broad sort of environmental, social, and governance strategy, all three. What I find people concentrating on more now is one of the E, the S, or the G, right? More of the themes. And I think a piece of that in the US is this push against the ESG label, sort of all three combined, which is why it's, focusing on something simpler like gender or climate, things like that.
How do you think why do you think that in the US ESG ETFs haven't been maybe as popular as over in Europe? Is it the quality of the ETFs, or is it the feelings behind ESG?
So I think it's two things. So first, they were very popular till about 2022, I want to say, almost as popular as Europe. It overtook Europe a little bit in terms of growth. That being said, I think the political backlash has had quite a bit of implication on its continued growth. Also, the one challenge in the US is that growth has been very concentrated to a few investors, which means that just a handful of investors put large chunks of money. So what we need today is we need a wider investor base, which I think is going to slow because of this backlash.
I wonder if you could talk a little bit about the sentiment there in the US, and can you, if possible, look ahead past the November election here? I mean, depending on who wins, who takes the Oval Office, what do you think that will do to sentiment?
I think it's definitely going to be driven by who comes into office, but at the same time also who controls some of the states, right? And that being said, the way I see it is if you have like the SEC regulation and you have a number of states suing the SEC because of that, that's going to continue to have a sort of a little bit of a negative backlash against it.
Also, you can make, the backlash started before we even were in the presidential cycle,
right. So I think the presidential cycle will have some impact, but I think the whole sort of backlash has to come down a little bit or go in some direction for this to have, some impact.
What do you make of the idea that maybe ESG doesn't actually help companies' profits?
Yeah, I mean, I can't for certain say that ESG has proven to outperform. I don't think anybody can say that unless they've done some kind of fancy quant analysis. We're starting to do that. I think we still have too limited a time history of data to actually make any kind of implication yet.
It's interesting, though, because I always understood the support for DEI and the support for ESG came in part from the new generation of consumers, from millennials who want to vote with their pocketbook, and also the diversification that's coming in the United States workforce.
Right.
So these are factors that aren't going away. And so how does that play into your view that the ESG backlash might fade away a bit?
So I guess I have two opinions there. So my one opinion is we've been saying for years that this whole transfer of wealth is going to happen. We still see the ESG investor base as highly institutional. It's not very retail based. So in that sense, I haven't seen this transfer of money come into effect. Will that happen, at least not in the ESG ETF world, will that happen over generations and over a time period? I do think so, but we haven't seen it yet, and we've been talking about it for a long time.
What about climate ETFs? So this goes to my specialty, right? There's the clean energy ETFs, and then there's a climate ETFs. What would be in a climate ETF, and what's the popularity there?
So there are now a whole range of climate ETFs. So first you have clean energy, which is more opportunities like solution-based. We then have low-carbon ETFs. So low-carbon are where you're just trying to sort of reduce the emissions of your portfolio. So you have a lot of large stocks like Microsoft or Google. And then you have fossil-free ETFs, which is just sort of removing the fossil fuel funds. And then you have this whole mix of different climate funds, which are transition funds and climate aware, and God forsake knows what they do, because all kinds of things. Clean energy actually is one that has had a lot of challenges in the last year, underperformed quite a bit. Climate, on the other hand, has seen quite a bit of inflows, while clean energy has seen outflows. And I guess I'm talking about climate X clean energy when I say that.
What kind of investments are those? Climate X clean energy?
Like low carbon, fossil free, climate aware, whatever that means.
So part of the reason why I want to make sure I'm clear on this is because I would very much like to go back to the point you were making about the new SEC rule.
Yeah,
and to talk a little bit about what this means for investors and how they should be playing it. First, can you talk a little bit about what the new rule actually does for everyone?
So what the new rule does is it states that large companies should be reporting on their climate risk and then also on their scope 1 and 2 emissions if it is material for their operations. Now, it's undergone a lot of changes. I think what this means is a lot more disclosure, but then we also think the SEC rule faces quite a bit of challenges in court. So we'll have to see how that plays out.
What does that mean for investors?
It means a lot more data, a lot more reporting, a lot more stuff to play with, a lot more stuff to integrate. So for research analysts like me, it just means a lot more analysis that we can do to actually maybe point to the performance question that Alex raised.
Right, so then maybe the more data you have, then you can actually do performing, and it's hard to have that right now. What I do think is interesting, though, is with all the ESG ETFs, particularly the climate ones, like how far up the supply chain do you wind up going for that? Because you could have a bunch of wind companies and ETFs, but where are they made? Where do you get the materials for that? Same thing with solar panels. So I just wonder how far it goes up.
So you're talking about scope 3 emissions, which is emissions not directly emitted by the company, sort of emissions in the supply chain. The SEC did have scope 3 disclosure in their rule previously, and then they cut it out of their final rule. Right. So it goes as far as the company's emissions. Full stop.
All right, Shaheen, thanks so much. Really appreciate it. Shaheen Contractor, Bloomberg Intelligence Senior ESG strategist, joining us there. Also, Jen, for a while, these guys just track tech companies because tech companies are the ones that don't have emissions versus like fossil fuels. And I wonder if that link is solely decoupling also.
Yeah, it's interesting because I do wonder with all the server usage, with the development of AI, that is going to be a real issue. But if those are all powered by clean energy, then you see that the problem gets pretty well solved pretty early on.
Yeah, unless I've been doing some reading on this too, that maybe actually those data centers will be very price dynamic in terms of their energy usage, so giving stuff back to the grid when prices are high. So there is a school of thought this is that's actually helpful. We'll see. Michael Barr's here for World and National News.
Thank you very much, Alex, Jen, and John. President Joe Biden warned Israel against attacking the city of Rafah in southern Gaza as ceasefire talks with Hamas remain deadlocked at the beginning of Ramadan. Biden expressed hope that a ceasefire can still be reached. Rosalind Matheson is Bloomberg's news editor for Europe, the Middle East, and Africa.
It's always dangerous when leaders talk about red lines. History is littered with examples of that where they've made that warning and then not really had anything to follow through, because there is that question of the US leverage over Israel. I mean, for weeks now, it's been a growing chorus of frustration and concern from the US about the situation inside Gaza, and yet it doesn't seem to have had any impact at all on Benjamin Netanyahu and the intent, he says, of his goal, which is still to ensure that Hamas can never again carry out a similar attack on Israel as they did back in October.
Bloomberg's Rosalind Matheson. Oppenheimer was crowned Best Picture at the 96th Academy Awards last night on ABC. Christopher Nolan also took home Best Director honors for Oppenheimer.
Movies are just a little bit over 100 years old. I mean, imagine being there 100 years into painting or theatre. We don't know where this incredible journey is going from here, but to know that you think that I'm a meaningful part of it means the world to me.
Emma Stone won Best Actress for her performance as Bella Baxter in Poor Things.
It's about a team that came together to make something greater than the sum of its parts. And that is the best part about making movies.
Cillian Murphy also won his first Oscar, named Best Actor. 50 people have been injured after a LATAM Airlines jet suddenly dropped in the air on a flight from Sydney, Australia, and New Zealand. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, stocks are retreating, heading to Friday's losses after closing at record high 16 times this year. S&P 500 showing signs of maybe overheating. Treasury 2-year yields, which are more sensitive to Fed policy, right now they're topping 4.5%, up 4 basis points right now at 451. The new week brings with it some economic data. We get consumer prices tomorrow, retail sales on Thursday. Brian Nick, senior investment strategist at Trahan Macro Research, sees a cooling economy, which should support Fed rate cuts.
To us, it feels like the labor market's settling down, fewer people quitting. We're calling this the great stay now instead of the great resignation. But to us, it feels like we're headed slower here.
Right now, shares of NVIDIA, they are down about 0.8% after almost doubling since the start of this year, while Apple and Tesla looks like they're advancing. Moderna, the best performing stock in the S&P 500. There's a government trial website that shows the drug maker starting a mid-stage study to test its cancer vaccine in patients with a form of deadly skin cancer. S&P 500, 20 points lower. That's down 0.4%, 5103 on the index. The Dow Jones Industrial Average is down 130 points. And the NASDAQ 100, 95 points lower. That's down 0.5%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jen and Alex.
Thank you, Paul. You're not Paul. You're John Tucker.
Oh,
wow.
Actually, I wish I were Paul, because I only went skiing once this season.
I was thinking about how you're looking at us and like making sure you're saying the right names, and then that's where that came from. And then I called you Paul.
It's all the big head trick here in the
okay.
studio.
I know you're different. I appreciate you. It's, you lose that hour of sleep. It really makes a difference.
It's
all
that watching the Oscars that kept you up late, and then now you're all tired and
I know. I'm just
confusing
Ken.
me with other people.
I'm just Ken. That's it.
Just call me Ken from now on.
Okay. That'll just solve all the problems. For here on forth, all men will be known as Ken. All right, talking about CPI for tomorrow. We got the New York Fed inflation expectations coming in for 1 year unchanged, right? But for the 3 year, they rose to 2.7%. For the 5 year, rose to 2.9%. So let's get the setup then for tomorrow. Adam Coons is Chief Portfolio Manager, Winthrop Capital Management. He joins us from Indianapolis, Indiana. Were you up late watching the Oscars?
I was up late, but not because of that. Got 2 kids. They didn't want to fall asleep.
Oh, okay, fair enough. So no Oscars for you, just to be clear.
No. Mm-hmm.
Man, I'm really batting.
You're really,
here.
you're striking out today.
This is tough. We should do the whole theme for the whole week this way, and just like really get a good read on who watches what. All right, Adam. In the market, CPI tomorrow. Are we selling a little bit in the front end because of that? Is that what we're seeing?
A little bit, yeah. I think unfortunately, we've gotten to this place where the inflation prints and anything that's going to affect the Fed is the primary driver of markets. So I think we're going to continue to see that through the rest of 2024. Expectations here really, right at 3.8. I think we're going to actually see this come in a little bit below that. I think there's going to be a surprise out of the service sector. We have already seen used car prices start to fall off as well, so that will play a role. So we're actually thinking we'll see a slight undertick from the expectations right now on both core and non-core CPI.
If the print comes in as you expect, a little bit of an undertick, how are markets positioned relative to that? Is there going to be a setup for some serious damage?
Well, I think it depends on how you're playing it. I do think you'll start to see interest rates on the short end come down significantly. But yeah, I think when we're talking about equity markets, that would be a sign that things are slowing down. I think a lot of people are kind of overlooking the impact that the slowdown in China is going to have on not just inflation, but just overall kind of consumption demand globally. So that's really what we think is going to drive this downtick, because this is just going to start to snowball. Like I said, as you see these big economies, demand is notably slowing down. U.S. has been resilient, but it can't outlive this forever.
So you think then that we won't get a rotation a solid rotation to other assets that will help prop up the market. That doesn't seem to be where you're at.
No, I don't. I think what you'll start to see is as this kind of fear starts to pick up. Obviously, there was a lot of fear last year that just didn't materialize, and so some complacency moved back into the market. But if we start to see that shift in any direction towards back towards the fear, I think what you'll see is just more of a risk off, and you'll just kind of start to see, the Treasury market will rally, but everything else, I think, will have a tough road ahead of it.
So what do you think then about overall corporate valuations? Are we in bubble territory then if, there's this expectation for a little bit of a softness?
No, I don't. I mean, I think our valuation's high, yes. But I think largely that can be offset by margin expansion. I think that's going to push us through this cycle, make it, this cycle at least, the business cycle I'm referring to, slightly more extended than what we've been used to. And that's why we don't think there's really going to be any significant softening or a recession in 2024. We might see something in 2025. I think it really just depends on Fed policy and how tight they keep things and how long they do that. But no, I think right now valuations are, and for the most part, fairly valued. There's absolutely stocks that you could consider bubble territory, but markets as a whole, no, not at all.
Okay, so in the scenario that you're laying out, what happens to the dollar? Like, you might have treasuries rally, but what does the dollar do in that scenario?
Honestly, that's a tough one because, it's a relative game, and at the same time, as maybe the Fed is forced to start to loosen their policy, everywhere else in the world is going to be way looser and have a head start on us. You're already, starting to see where China is going to have to produce some significant stimulus measures in order to prop up that economy. Europe is really no different at this point. So I think on a relative basis, I think the U.S. dollar remains fairly strong, which I think will make it difficult to invest in emerging markets as a whole and could weigh down other countries. So I do think the U.S. dollar maintains its strength. It might weaken slightly, but by no means do I see it falling off a cliff like we've seen in past recessions.
So where does this leave the progress for Fed rate cuts?
Well, obviously the market's expectation has changed significantly as this year, just in 3 months, has come along. For it was pricing in 6 cuts to begin with, and now we're well below that, approaching 3 to 2. From our standpoint, we do think the Fed's going to be a lot slower to react through this monetary cycle. When you look at how they entered this with very slow changes into increasing interest rates using the transitory narrative for far too long, I think they're going to do the same thing on the back end, is that they're going to hold tight here and really wait to decrease interest rates until there are some serious cracks in the economy that they can point to, and all their data set, both hard and soft. Right now, I think that the rhetoric is that there's this idea that the economy is softening, but there's just not enough data to get the Fed to actually act. And so until you see those data points really screaming that the economy is slowing down, I just don't think the Fed's going to cut. And I don't know if they cut at all in 2024. Oh,
okay. So joining the Torsten Slog Apollo camp, that maybe no cuts, which de facto, that would kind of be a hike in essence. What would that do, you think, to the economy?
Well, I think honestly, if they don't cut at all this year and they keep things tight for longer, I think that is gonna that could lead us into a harsh disinflationary period where they overshoot the 2% inflation target, and suddenly we're wondering what happens if we're seeing Japanese style deflation. I think that's a low probability, but if they stay too tight for too long, that is the increasing probability of events. That it's a harsher thing for the economy to deal with deflation than some slight inflation.
All right, thanks a lot. Really appreciate it, Adam Coons, Chief Portfolio Manager at Winthrop Capital Management. That's super interesting if they have to wait, and the idea is the longer you wait to cut, then the worse the circumstance will wind up being. Just taking a look here at the market, we are seeing softness all across. In the equity market, volumes, though, still relatively light. And in the bond market, you're seeing some selling really come in, though, more on the front end. You got yields up by about 4 basis points. As we look ahead to CPI tomorrow, I do feel like everyone's a little tired from the weekend. I feel like that's part of playing into this. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker. We'll look at some of the company news we're following. Boeing extending its 2024 slump to more than 25% since the start of the year, down over 26%. After the Justice Department opened a criminal investigation into the mid-air blowout of a fuselage panel on that 737 MAX 9 in January, Boeing is facing growing scrutiny from legislators, regulators, and even passengers following that incident January 5th. The Transportation Secretary, Pete Buttigieg, is telling Fox News Sunday the FAA will use an enormous amount of rigor in dealing with Boeing, in dealing with any regulatory issue. A water brand with a popular social media following is now a billion-dollar company. Los Angeles-based Liquid Death has raised new capital that values the startup at $1.4 billion, double its $700 million valuation just in 2022. The business has seen its momentum continue with newer categories like iced tea and flavored water. Liquid Death launched its iced tea last year. It's already climbed to the top spot for bottled iced tea sales on Amazon.com. And Blackstone, Apollo Global Management, and Bain Capital are betting billions of dollars that services like Netflix would feed bottomless demand for Hollywood sound stages. Now they're about to find out whether they were right or wrong. New entertainment facilities are being built at a record pace and coming online just as producers like Walt Disney are facing investor pressure to cut costs and show a profit from streaming. For soundstage owners, occupancy is down, leases are getting shorter. In LA, construction underway and on the drawing board could add 50% to the current stock. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
You are listening to Bloomberg Intelligence on this Monday. Happy Monday, everybody. I'm Alex Steele here with Jen Ryan. Paul Sweeney is off for the week. We cover all the analysts, all the data, all the company news with our 2,000 companies and 130 industry we cover worldwide with our amazing set of analysts. For now, we do want to get you caught up, though, with world and national news with Michael Barr.
Thank you very much, Alex, Jen, and John. President Biden is warning Israel that attacking the southern Gaza city of Rafah would be a red line as ceasefire talks with Hamas have reached a standstill at the start of the Muslim holy month of Ramadan. Aaron David Miller is a senior fellow at the Carnegie Institute for International Peace. He says the split between Biden and Israeli Prime Minister Benjamin Netanyahu is real.
Anger and frustration on the part of the administration is growing. I don't think we're on the cusp of a public breach. The problem is that with no hostage for prisoner release deal, the battlefield dynamic is laid threadbare for all to see.
Aaron David Miller of the Carnegie Institute was on Bloomberg Surveillance. New Jersey Senator Bob Menendez pleaded not guilty to revised charges at a hearing in New York federal court this morning. The Democratic senator, his wife, and two of their alleged co-conspirators face 12 new criminal charges stemming from a bribery scheme linked to Egypt and Qatar. Federal prosecutors originally said the Menendezes received hundreds of thousands of dollars in cash, gold bars, and a luxury car in foreign exchanges. The feds have now added new allegations of obstructing the investigation. NATO Secretary General Jens Stoltenberg welcomed Sweden to the alliance today as its flag was raised outside NATO headquarters in Brussels. Stoltenberg said NATO is bigger and stronger now with the addition of Sweden and Finland.
When President Putin launched his full-scale invasion 2 years ago, he wanted less NATO and more control over his neighbors. He wanted to destroy Ukraine as a sovereign state, but he failed.
Sweden is the alliance's 32nd member country. Oppenheimer won Best Picture at last night's Academy Awards. The film star Cillian Murphy also won for Best Actor. Emma Stone won for Best Actress for her role in Poor Things. John Cena came out naked. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Alex, Jen, John.
I mean, I don't know. I think that was probably the best recap. If you could have just added some Kenergy in there, I think we'd be in a good spot, Michael Barr.
I think my wife's friends all came to watch the Oscar, and if I came down, they would say, John Cena? No, that's somebody's hyena. Sorry. Sorry, Fred Sanford.
Man,
Back to you.
That was amazing. All right, in other news, I have now found what? Geetha watched the Oscars, and maybe Shaheen watched a little bit, and me. This was it. This is what I found today.
I wonder if there's any read across to the audience members for the audience numbers for the event itself.
Oh, probably.
Yeah, I'm sure it is.
Like,
yeah. You're
older.
the bellwether. You are the bellwether.
Says no one ever to me. So here's some fun news in my little world here. I cover energy. EQT, which is a natural gas company, is agreeing to buy back former Equitrans Midstream. I'm sure I'm saying that wrong, but for about $5.5 billion in stock. This is basically about the Mountain Valley Pipeline project, which has just had such a hard time getting going. And the idea is that it's going to take natural gas from the Marcellus and Appalachia and bring it down to the southeast, where it's desperately needed, and maybe even to the Gulf Coast, which then it can be exported.
Why is it so desperately needed?
Because we have so much natural gas, and just look at prices, right? I mean, under $2, and a lot of it is landlocked. So the gas in the Gulf Coast, particularly associated gas. So if I'm producing oil and I get some gas out of it, that's good to go. But the Northeast is where you have the Marcellus and all of that. That's a really good basins for natural gas. But if you can't get it anywhere, how are we benefiting from any of it at the end of the day?
But why all of a sudden is there this mania to have it? I mean, is this an AI play, or what's the deal?
I don't know. They did talk about AI, right? Because of data centers, so there's clearly a demand. So that's something that the CEO said on the call. AI, I don't know. When you say AI for anything, that seems a little bit far-fetched. I think it's about just exporting. It's a whole new market. Anyway, Jen will be back tomorrow. Thank you so very much. Balance of Power is up next. Happy Monday.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The president drops his budget for the new fiscal year at this very moment, even though we still don't have a budget for this fiscal year. Welcome to the fastest show in politics. As the White House takes the wrap off the annual spending plan, it's happening right here at high noon. We'll tell you coming up what is inside and get into the fine print with Douglas Holtz-Eakin of the American Action Forum. Joe Biden draws a red line on Israel. And the clock starts ticking again on another possible government shutdown. You ready for this? We'll update all of these stories, of course, with analysis from our signature panel. They're back together today. Rick Davis, Jeannie Shanzano, Bloomberg Politics contributors. And it's all after a look at Wall Street. We start there, as always, in New York with our friend Charlie Pellet. Hey, Charlie.
Oh, well, hello there, Joe Matthew. I thank you. Happy Monday. Back to work Monday, and a down day right now for the Dow, the S&P, and NASDAQ. We are in the red, right to the numbers here. 10-point drop on the S&P, 51.13 down by 0.2%. Dow Industrials lower by 53, down 0.1%. We've got NASDAQ lower by 30, down 0.2%. Traders finding little encouragement to keep pushing the stock market higher at the start of a week that will bring the CPI report among many other key data points. After the close of trading today, we will be hearing from Oracle. Ahead of that report, we've got Oracle shares up now by 1.3%. 10-year, 4.09%. The 2-year, 4.51%. Spot gold today trading higher by 0.2%, 21,084 on spot gold. West Texas Intermediate crude 78.24 a barrel, up 0.3%. And Bitcoin with a 72,000 handle right now. Bitcoin 72,082. Bitcoin surging by 3.8%. So the jobs report is behind us. Next up for Wall Street, this week's reading on consumer prices, a report on inflation that will test the resolve of a bull market, riding on bets that the Fed is moving closer to a pivot to easier policy. Aditya Bahavi is senior U.S. global economist at Bank of America.
The CPI report is probably the most important one in my career on Wall Street. We have 0.3 on the core, 0.4 on the headline, but the details really matter. So the concern last month was re-acceleration in services, and we're looking for about 0.5 on core services with OER coming back down to rental inflation. So that's going to alleviate some of those concerns, but it's still too high for the Fed's comfort.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Again, stocks lower, recapping with the Dow, the S&P, NASDAQ, all in the red to kick off the new trading week. S&P right now down 10, drop there of 0.2%. Balance of Power continues. And once again, here's your host, Joe Matthew.
Hi, Charlie. Thank you. Welcome to the Monday edition of Balance of Power. Yeah, happy Monday. We got news. I'm Joe Matthew in Washington. I'm glad you're with us here on the radio, on the satellite, and on YouTube, where you can find us right now if you search Bloomberg Global News. Find our live stream and join me here inside the terminal because we've got the budget. It just dropped. We're going to get into this a bit more with Douglas Holtz-Eakin coming up in a few moments, but I want to give you the news as investors have been waiting for this. Remembering the president's budget is a statement of values. 7.3 trillion, there's your headline, dollars, fiscal year 2025. We haven't figured out the one we're living in right now, but we're on to 25. $621 billion domestic discretionary spending. Deficits would fall $3 trillion if they approve taxes on the rich and corporations. U.S. debt hitting $45 trillion in a decade. The president is asking, here we go, $895 billion for defense-related programs. We'll have much more on this as we work our way through the hour here. As the White House says, indeed, it will reduce the deficit by about $3 trillion, but you got to pass some tax hikes to make that happen, and we can't even pass an actual budget. Meantime, the president making news over the weekend on Israel. Ramadan began yesterday. And as you remember, walking into the State of the Union last week, the hope was to have a ceasefire in place by then. It did not happen. And the president now referring to red lines when it comes to Israel, warning Benjamin Netanyahu, as I read in the headline, not to attack Rafah as Ramadan begins. And that is where we start our conversation with Ian Marlowe, Bloomberg senior reporter covering diplomacy. And boy, we could use some now, Ian. It's great to see you. Thank you for making us part of your Monday. We start talking about red lines. We think about Barack Obama in Syria. The messaging here is getting pretty complicated. What's the president doing?
I think he's kind of grasping at straws to some degree. I think the U.S. is facing, several months into this, 5 months into this conflict, the real possibility that they just don't have as much leverage over Israel as they would like. Yeah. They're airdropping aid when there's plenty of land borders with Gaza. Mm-hmm. They're now talking about, as President Biden said in the State of the Union, they're going to be creating a temporary pier to bring in aid by sea. Mm-hmm. Sort of everything except pressuring Israel to the degree that would actually bring about significant change in the humanitarian situation, which is getting incredibly dire with, famine, starvation, and the rest of it looming.
So now it's like public diplomacy. He's speaking through the media, a hot mic moment at the State of the Union. When he said that to Jerry Nadler, I'm going to have a come to Jesus meeting with Bibi, did he want that to go out to the world?
Yeah, it's hard to know. It's hard to know with both Biden and Netanyahu here because they are both dealing with really intense international and domestic situations. I mean, Biden's facing an election here. Yeah. Netanyahu will face an election as soon as the war ends. He's got people in his far-right coalition that want even tougher stance on, Gaza, no aid getting in, crushing Hamas, going into Rafah where there's all, more than 1 million civilians sheltering. It's a complicated dance right now, and I think the harsh words and rhetoric we're seeing now is an example of that behind-the-scenes diplomacy failing to take hold. And that diplomacy, the hostage talks, the talks about what happens in Gaza the day after, all of that is continuing, but all of it can still founder on Bibi, basically saying no.
To what extent does Ramadan factor into the chances of a ceasefire happening now? Does this put talks on ice for a month, or will they continue?
At the moment, I think privately, U.S. officials are thinking that Hamas is going to wait a little bit until Ramadan rolls out a tiny bit, so they can see whether that little space will allow the region to heat up maybe you will see protests. Maybe we'll see protests, in the West Bank or across the region, perhaps more violence. And that might put pressure on Israel, the U.S., and allies to try and get to the table more. That is the sense from the West about what they think Hamas is doing. But at the moment, no one really knows. And I think, obviously Biden had hoped, for a Monday or two ago for this hostage deal to be done, still not done, and it doesn't look like it's going to be done in time for, definitely not in time for Ramadan,
Certainly
at least
not.
the beginning. Yeah.
Just lastly, Ian, there was a big supplemental budget request that was mostly geared toward Ukraine, but had billions for Israel. Is that off the table now? Are we still going to send that money if it's ever approved?
I think the thing is now they're sending a lot of military aid sort of below the threshold where they need congressional approval. So a lot of that has still been going on. I think that's sort of nuts and bolts, repairs, extra equipment and things like that. I don't think it's clear exactly what's going to happen with that in terms of the broader funding. But I don't think there's any sense at the moment that Israel is in dire straits on unlike Ukraine, right?
Yeah,
That's a separate
very
conversation. Yeah, exactly.
I'm glad you could come talk to us. Ian Marlowe, Bloomberg senior reporter covering diplomacy. Look for him on the terminal and online as the president draws a red line in Israel. It's an important moment. I'm glad you could share it with us, Ian, with great reporting, as always, here at Bloomberg News. I'm Joe Matthew in Washington. Turning back to the budget that just dropped, and this is the day we've been waiting for. Remembering, of course, that this is not the budget that will pass. It's not only coming from the White House before Congress gets its hands on it, but we're in the middle of a campaign season. So all of this is, as we hear every year, a statement of values. The question is, can any of this get through the House and the Senate? Could this, in fact, be the framework, the skeleton of a budget? Here's an even crazier question. Will we have a budget in 2025? Still haven't found one in 24. Douglas Holtz-Eakin used to do this for a living when he was, of course, chief economist, the President's Council of Economic Advisors. He's now president of the American Action Forum and joins us. Douglas, it's great to see you. Happy Budget Day. I specifically asked for you so we could get your read on this, and I'm glad you could join. The headlines are just rolling, and I want to just let everybody know that this came out at noon, so Douglas hasn't exactly been able to pore over this with the green visor. Just broadly, though, Douglas, how do you look at a budget from the administration? What parts are you looking for to get a sense of what might happen to the actual spending debate here in Washington, not the campaign?
Well, I think there are two big things you look for in a budget. Number one, how much deficit reduction do you get? It takes something like $8 trillion over the next 10 years to stabilize debt relative to GDP. This budget won't contain $8 trillion deficit reduction. So we're still going to see the debt rising and rising more rapidly than the economy. Second thing you look for is what steps are being taken to slow the growth rates of Social Security and Medicare. We're going to spend about $82 trillion over the next 10 years. Nearly $35 trillion of that will be Social Security and Medicare. Those are the big programs in the budget. They grow faster than everything else. They grow faster than revenues possibly will. 7% for Medicare, 5.5% for Social Security. This budget won't contain anything that's going to slow the growth of Social Security and Medicare. So it's a statement of campaign values, but it is not a serious fiscal document.
Wants to raise taxes. We've heard this before from President Biden, raising taxes specifically on the wealthy. Billionaires would get a minimum 25%. He wants corporate taxes higher, and that is the justification for lower deficits in this plan. Douglas, they say deficits would fall $3 trillion with these tax hikes approved, but we all know that is not going to happen, right?
No, they want to raise the corporate rate up to 28%. The trouble with that, of course, is since it was cut down to 21%, we haven't lost the headquarters to a U.S. corporation, and we used to lose about 10 a year. And so that problem got fixed, and now they're now threatening to unfix it. I don't think Congress would go along. They want to join the international 20% minimum tax. Congress has shown no interest in that. And they want to raise this book income alternative tax from 15 to 21%. You will recall that the Treasury threw up its hands last year and said, we're not going to collect this 15% tax. We don't know how. So that's hardly reassuring if you're going to make the rate higher and you still haven't collected a dime the last time around. All in all, these are, making the point that we want to tax corporations, we want to tax affluent individuals, but they're not proposals that are likely to get over the finish line.
Here's your reality check. And as I read further down, Douglas Holtz-Eakin, the president is calling on Congress to apply his cap. It's a $2,000 cap on drug costs, $35 insulin cap for all, not just Medicare. That's playing pretty well on the campaign trail. This has been one of the things that the president talks about that is received very well. Why doesn't Congress approve that? Why doesn't the Republican majority in the House take it away from him?
Well, there's a pretty small fraction of Americans who have more than $2,000 in drug costs every year, something like 3% or so. So you're going to cap everyone at $2,000. That's a pretty broad insurance mandate. And how are they going to pay for that? Well, they're going to have to raise premiums. So this is a recipe for higher premiums on every health insurance policy in the United States. I don't see members of Congress who are up every 2 years being too eager to get into that discussion. Insulin's a different matter. That's a pretty popular idea, and it's popular proven by the fact that every pharmaceutical company offers insulin at $35 a month. They have a private program to do that. So the Medicare proposals, the health insurance proposals are not quite as practical as they appear to be appealing on the campaign trail.
Yeah, sure. Now, you and I are having this conversation with a straight face. We're getting wonky on this stuff, and that's what we do. But the fact of the matter is we don't have a real budget for 2024, and I'm just not sure if we're ever, you can tell me, going to get one for 25. We're actually under a laddered CR right now that with the second half set to expire on March 22nd. And if you watch or listen to this program, you don't need me to tell you about it. God love this audience. They're dialed in. Douglas, I wonder if it's more likely we shut down on the 22nd or actually get a budget for 2025.
Well, certainly there is a threat of a shutdown, but I think the good news is that from all of the political polling that I have seen and people I've talked to, a shutdown hurts Republicans dramatically in the fall. They don't want that. So there is an incentive for the House to get it together and compromise, get these over the finish line and put the 2024 budget, which began October 1st, 2023, so we're way behind schedule, put that in the rearview mirror. Yeah. And then see if they can get to yes on the next year's budget during the campaign season. I'm a little pessimistic on that front.
About which part? Whether we go beyond the 22nd?
Oh no, I think we'll get that done. I think that's in their political interest. But we now should be doing the 2025 budgeting, and I don't see that getting done in an election season.
Yeah, God. We're just going to get used to this stuff. The president did sign the first minibus over the weekend, $460 billion. That's the first 6 bills. The other 6 are in the next package, which actually is a much larger portion of the budget. And as you know, Douglas, it includes HHS, it includes Homeland Security, the Pentagon, the sticking points here, the stuff that no one can seem to figure out. What makes you optimistic that they get this done?
So take the polling on the House Republican side. They have
it's as simple advantage. As that, though. You don't want to be blamed for it.
No, look, I mean, it's real simple. They have a big advantage on the immigration issue. If they close the government, they lose it entirely. So Republicans finally have a reason to get to the table with Democrats in the House. In the Senate, that's already happened. And so we're going to see the same movie we saw with the first minibus. At the last minute, they will put this on the House floor under, quote, suspension of the rules. They'll get a 2/3 majority. It'll be carried a lot by Democrats, also some Republicans, and we will finally have the budgeting in place for the remainder of the fiscal year.
That would be a small miracle around here. We avoid the sequester in that case. And then we start looking at the next fiscal year. I can't imagine how that would actually proceed. You don't think we get a real budget for 25. Do we go through the motions, or is the House essentially closed after this?
So the House Budget Committee actually marked up a budget resolution. They did it the day of the State of the Union, and they will vote on that in the House Budget Committee. The Senate Budget Committee has shown no interest in doing any budget work this Congress, so I don't think they'll do anything. So we won't have a real congressional budget process. We'll get the president's budget today. They'll look over it and they'll start negotiating about the kind of spending they could maybe agree on after the election. But I think we're doomed to a continuing resolution from September 30th through the election.
Wow. All right, we'll play this tape back. Douglas, thank you. I'm glad you could join today. Happy Budget Day, even if it's not real. Douglas Holtz-Eakin, the president of the American Action Forum. He's been inside the bubble, was chief economist of the President's Council of Economic Advisors, 2001 to 2002, the Bush White House. As we drive on, the fastest show in politics. I'm Joe Matthew in Washington. We'll have more on Congress next. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go.
See? Well, I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurise the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Of 1%. Balance of Power continues. Back we go to Washington. Once again, your host. Here is Joe Matthew.
Charlie, thank you. Great to have you with us here on the Monday edition of Balance of Power as we clear out the cobwebs from the weekend here in Washington. It's actually pretty nice out. Going to start feeling nice around here in the Capitol as we see the flower buds, the green shoots. We'll be talking cherry blossoms before you know it. The question is, will the government still be running? It's 2 Fridays out. Now we've got 2 weeks to figure out this second half. The president signed a bill on Saturday that makes 6 bills law. Okay, we got that done. This was the non-controversial part of the budget, remember? Now lawmakers return this week with 2 to go, 2 weeks to go. March 22nd, the deadline to get the big stuff, the Pentagon, Homeland Security, Justice Department, Health and Human Services. Think Ukraine, think abortion, think much more controversial items, the border, when we talk about Homeland Security. So that's why they say this one might not come as easily. Now, if you were just listening to Douglas Holtz-Eakin, and he's a veteran, budget battles, he's pretty optimistic that'll get done. He is not optimistic that the president's budget drop today will go anywhere, or that we will even have a budget for 2025, being, of course, locked in the throes of a campaign year. Billy House knows all about it. He does this for a living, covering Congress, and he's with us right now coming off the State of the Union, at the beginning of the big road trip. Good to see you, Billy House, Bloomberg congressional reporter. It's great to have you with us. Happy Budget Day. We've been through the whole statement of values portion of the conversation. Is there anything in Joe Biden's budget that we see here now that might actually be part of a law or a bill that could become law, something that could actually pass?
Well, it's obviously it's aspirational, a lot of it. The back and forth on middle class tax breaks versus lower price reductions on things based on wealthier taxes on wealthier people. All that seems like election year fodder, and you're correct. Doesn't seem like much there that is going to be ingrained in stone here is actually happening. But it's an opening salvo, and it does kind of lay out some of the debate as we, if anything, as we head into the stretch runs of the campaigns.
Paints quite a contrast, Billy. The president is calling for higher taxes on the wealthy, 25% billionaire tax, I believe, is what he's looking for here, and a higher corporate tax rate up to 28%. And he says if those get done, we'll be able to lower the deficit. This, of course, is a Joe Biden versus Donald Trump campaign. So voters are looking at the choice between higher taxes on the wealthy and corporations if Joe Biden wins, and making permanent the 2017 tax cuts if Donald Trump wins. Is that fair?
That is fair. And we have a divided Congress as well, and we very well might continue to have one. So you throw all that in, and it's just an opening salvo that will be, like I said, aspirational on the White House's end. Not much solid there that we know will happen.
Before I ask you about the budget we're currently operating under, Republicans did mark up a 2025 budget last Thursday. It was before the president got up to the Hill to make the big speech. What does that plan look like?
Well, that obviously involves a lot more social service cuts, a lot more slicing and dicing that the president has proposed. But it too is aspirational, given that the Senate, the other chamber, is controlled by Democrats at this point. Again, it's an opening salvo. The fact that they did release a GOP budget was in itself maybe noteworthy. There's been struggles to do that in recent years. So they have a baseline, at least, of their own aspirations.
Well, this whole conversation is aspirational. The fact that we're wading into this, Billy House. What's going to happen in the next 2 weeks? We've got obviously some work to get done here, but everyone seems pretty optimistic that we're not going to shut down. How do they avoid it?
Well, you're right. Pretty optimistic, if not outright aloof. I mean, on Wednesday, House Republicans, although we're facing a March 22nd shutdown deadline with the next tranche of agencies that need to be funded, they're leaving town. They're going to their, retreat in Greenbrier, West Virginia, to talk over issues and campaign strategies. Yet, staff will be in town. But you're right. March 22nd is the deadline for the next group of bills you discussed. Some of them seem to be pretty resolved, but like you mentioned, Homeland Security has got a lot of wrinkles that could involve yet another short-term continuation or patch before it will finally be hammered down.
Well, so we're obviously not there yet.
No.
I don't know if that optimism is well-founded, but if we're talking about a shutdown in a couple of weeks, that's going to be an interesting story to ricochet on the campaign trail. As is TikTok, Billy. We understand today that the speaker, or I guess it was Steve Scalise, said that they are going to bring this to the floor, this TikTok ban that isn't really a ban, but would force ByteDance to divest or ban TikTok here in the U.S. Is this something that the House can pass?
It can pass the House. They're going to vote on it tomorrow, Wednesday, before Republicans skedaddle to West Virginia. This is, though, facing all kinds of resistance, obviously, from some senators. They're certainly not on board necessarily. And the whole issue, of course, is whether TikTok, owned by ByteDance, is really controlled by the Communist Party of China. But, the American public, large segments of it, have embraced this as a way to communicate, even make money. So there's a lot of wrinkles to this, too. Republicans, though, seem to be moving ahead with a vote Wednesday. How it will play out in the Senate is anybody's guess.
Do you know what got this going again, Billy? I'm just really fascinated by a story that came to a screeching halt when TikTok dumped millions of dollars on lobbyists and they shut down what appeared to be a bipartisan movement. How did this come back to life again the last 2 weeks?
But it's part of the whole House Republican focus on China, the creation even of a committee to look into whatever China's doing and weaponization of whatever that country is doing that could harm us. This is another spin-off on that. This is also a kind of a split. The more conservative Republicans apparently find a lot of benefit at home talking about anything China, and tying TikTok to that is just high on their board. Whether it really plays well with everyday Americans, I don't know.
Fascinating.
The
Greenbrier you mentioned.
A single company, single them out is something very unusual for Congress to do in any legislation as well.
It's certainly a Republican-led Congress. The Greenbrier you mentioned, we've got the big leadership retreat later on this week. This is West Virginia luxury resort. When you go to their website, Billy House, it says, discover the Greenbrier, a world-class resort in West Virginia's majestic Allegheny Mountains with acres of pristine grounds and spaces etched in history. The tagline, discover life as few know it. That's kind of an everyman's place to go for the weekend, right?
Oh, certainly. Unless you're a reporter, because they're going to separate us from the hotel into a little, another little place along the way, and they'll come out and tell us what they want to tell us. But the hope is that we'll be able to get some news out of there about Mike Johnson, the new speaker, and his standing at this point within the conference. It's still rocky. And as we're discussing here, what they're going to do with the rest of the election year, what's their strategy, and that sort of thing.
So you're not going to bump into Mike Johnson on the golf course?
I believe there will be a lot of golf playing out there. Of course, the weather will determine some of that, I assume. But we hope to run into Mike Johnson, but it won't be on the golf course.
You can only imagine. I can't imagine. I'm not going to speculate if Billy House has a bag of clubs there in the car. It's great to see you, Billy. Thank you. Billy House covers Congress for us here at Bloomberg. And we have breaking news, by the way. We're going to hear about this, I bet, in a second from Amy, but you might have heard the Secretary of Housing and Urban Development, Marcia Fudge, is leaving the building. I'm grateful for all her contributions toward a housing system that works for all Americans. I wish her well in her next chapter, President Biden says in a statement. She had spoken with USA Today saying she's out, and by the way, not running for Congress. I'm Joe Matthew in Washington, where it's happening. We're coming back to town. It's Monday. We got 2 weeks to get a budget done here. The president, and by that I mean finish a budget or something. The president dropping the big budget today for 2025, and that in itself is a campaign move. We're going to dig into all of this ahead with our panel. They're back together. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are on the way. Kaylee Lyons will join us about a half hour from now, an hour or two. Right now, it's world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe, and you're absolutely right. President Biden says that the U.S. Housing and Urban Development Secretary, Marcia Fudge, is leaving the administration. She's retiring from public life. She's not running for anything else. The Deputy Secretary, Adrienne Todman, is going to serve as acting. The president has also dropped his budget, and the U.S. evidently believes that inflation will remain stubbornly above the Federal Reserve's target. They just released it about a half hour ago, assuming that economic activity will increase 1.7% this calendar year, which is well below the 2.1% median forecast of economists surveyed by Bloomberg. The president also warning Israel that attacking the southern Gaza city of Rafah would be a red line as ceasefire talks with Hamas have reached a standstill. Aaron David Miller is a senior fellow at the Carnegie Institute for International Peace and says the split between the president and Israeli Prime Minister Benjamin Netanyahu is real.
The problem is that with no hostage for prisoner release deal, the battlefield dynamic is laid threadbare for all to see. Hamas is using tunnels in time to create mounting pressures inside Israel and externally from the United States on the Netanyahu government.
Aaron David Miller of the Carnegie Institute was on Bloomberg Surveillance. And the movie Oppenheimer, the big winner at the Academy Awards, picking up a total of 7, including Best Picture and Best Director. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo. We can do that. Bingo's my cockapoo. Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Ratio.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Thursday brings retail sales data, and Bloomberg Economics says the weather probably provided a boost led by autos. Vinny Del Giudice, Bloomberg Radio.
Oracle will be among the names reporting today. After the close of trading, Oracle will report fiscal third quarter results, and investors do expect to see a stabilization in the company's closely watched cloud infrastructure unit. Ahead of the report, on a down day for the rest of the market, Oracle up now by 1.5%. Recapping stocks lower, S&P down 7, down 0.1%. Balance of power continues. Back we go to Washington, and once again, here he is, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to Balance of Power here on Bloomberg Radio, on the satellite, and on YouTube with breaking news. The senator from New Jersey has pleaded not guilty to the latest charges. This is Bob Menendez. The supplemental indictments here just keep on coming. Not guilty today to expanded bribery charges that accuse him of accepting gold bars, cash, and a Mercedes-Benz in exchange for helping 3 businessmen. This goes back now. The original counts, my goodness, this was months ago. He's now facing 16 counts, including bribery, fraud, extortion, obstruction, and acting as a foreign agent of Egypt. He did not say in the court today whether he is going to run for re-election. There has been a report suggesting otherwise. He said when they shouted him in the hallway, "I will not be announcing it in a courtroom." And that's where we start our conversation with Tony Ahrens. We want to get a couple of minutes here before our panel with Bloomberg's legal team editor. Tony joins from New York, and it's great to see you, Tony, because I'm sure you need to be editing a story right now. Can you give us a sense where we are in this ballgame? People first heard about this months ago, this case, and there have been repeated supplements on top of the original indictment. What do we need to know today?
Well, he pleaded not guilty today to the revised charges, which the main thing was the obstruction charges that came in recently, which was that he was instructing his lawyers to lie to the court about the nature of the payments he was receiving, about the bars and the loans and things like that. But on to your point, what we're probably looking at right now is more delay. The judge has a May 6th trial date set for this. It's only about 6 to 8 weeks away. It's not very far off. But the senator wants to delay that. He asked to delay it today. The judge denied it, but the judge admitted that he will likely appeal on 2 grounds. One, that it's just not fair to have a trial this quickly after these new charges are filed. And 2, the senator has said that the indictment violates the speech and debate clause of the Constitution, that you have the right to do things for constituents that are in the ordinary course of business. And he is likely to appeal that, and if he does, it could take months or even years to do it. When he was charged several years ago with bribery, he did file an appeal like that, and it delayed everything about 18 months.
To your point, he and his wife, the senator and wife, were accused in this new indictment of directing their lawyers to make false statements to prosecutors about the payments. When you hear about a supplemental indictment or additional charges, additional counts like that in an ongoing case, what does that tell you? They obviously intercepted some evidence here.
No, the prosecutors are very, very serious about this case. Don't forget what happened. What triggered the new charges last week is one of the original 5 defendants, Jose Uribe, flipped, as everybody likes to say, and agreed to cooperate with prosecutors. And within 4 days after that, they filed these new charges against the other 4 defendants.
All right, got it. Tony, thank you for jumping on with us here. I know that you're a busy man today. Tony Ahrens with us, helping to lead Bloomberg's legal team with breaking news on Bob Menendez. I'm Joe Matthew in Washington, where we assemble our panel in the Monday edition of Balance of Power. It's budget day, the president coming off the State of the Union address, and we've got our signature panel with us. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Biden campaign raised $10 million after last week's State of the Union address. Jeannie Shanzano, that should tell you something, I guess, about the impact that the speech had. Everybody was talking about how he cleared the bar on Friday, he brought the fire. Now it's actually showing up in terms of dollars. What does that tell you about his potential to reset the conversation?
Yeah, I mean, they're feeling very good about this. You know, traditionally, we will see a small bump in the polls in addition to the fundraising. That bump likely won't sustain. But for the Biden administration, or the campaign rather, they feel this is a new phase in the election, and they want to go out and keep this momentum going. That's why we saw the president, you know, going to the swing states already. Of course, Georgia this weekend, Pennsylvania before, and he will hit more of those. And they are really going to try to keep up the energy to address the real questions people have about his age. They're doing this with this new ad buy, and of course to keep up this contrast with Donald Trump. So we are just at the beginning. I think we have, what, Joe, 230 days or something, 240 days left until the election. So they feel like they have some good momentum. Yeah, I'm counting for you, Joe.
What a thought. As the president comes off the State of the Union address with this latest haul, Rick Davis, there are questions about Katie Britt, who, of course, delivered the official Republican response, not just about her performance. She was parodied on SNL, and I guess that comes with the territory here. Could do worse than Scarlett Johansson, I figure. But details about Carla Jacinto, who's sexual trafficking story was relayed by Katie Britt with quite a level of detail in the address. Jacinto speaking out now to say that she met the senator at an event at the southern border and other government officials instead of a one-on-one, as Britt had stated. She also said she was never trafficked in the U.S., as Britt appeared to suggest. She was not trafficked by Mexican drug cartels, but in fact by a pimp who was up to his own business with a family that was doing this kind of stuff. She was kept in captivity when George W. Bush was in office. Does Katie Britt need to restate all of this, Rick? I know it came up on Sunday morning, but the story doesn't seem to add up.
Yeah, I'm not exactly sure why, under these circumstances, such a heightened profile event like the response to the State of the Union, with somebody who is such a treasure for the Republican Party going forward, that anybody would risk putting together a speech, that flew so loose in the face of what Senator Britt was representing versus, what's actually occurred. And fact patterns being fact patterns, there's always a looseness of that in politics to begin with. You never get in the way of a good message with facts. But in this case, I would have thought they'd have thought that through much better. I mean, it really puts Senator Britt in the hot seat. She's going to have to respond to this. And the worst thing is, well, this is what the speechwriters gave me. Well, sorry, but you're always responsible for whatever comes out of your own mouth. And so I think she's in a tough spot. It's clearly an overreach by the folks who prepared this speech. You could tell, and I don't think anybody would second guess this, that it wasn't the most comfortable speech for her to give to begin with. She seemed extraordinarily strained in the process. These weren't her words. These were the words of people who craft these speeches to be campaign commercials, and they didn't do her any favors.
We talked about this part of the story on Friday, Jeannie. The person we're talking about here, Carla Jacinto, and her story received 4 Pinocchios from the fact checker at the Washington Post, Glenn Kessler. Is this a thing? Are we going to be talking about this for a couple of weeks, or does it just fall into the sort of long line of troubled responses from both parties in the history of states of the Union?
I think it will fall by the wayside, and I think Senator Britt will recover. But I think, the reality is that this is such an important issue for Donald Trump and Republicans going into this campaign. I agree completely with Rick. I'm not sure why they would allow her to go out there with a fabricated story set 20 years ago during Bush's administration in another country, because that raises all kinds of questions. But the main one is, if things at the border are so bad, and many people believe they are, just look at the polls, then why do you have to fabricate a story? Why can't you go with what's so bad to begin with? Because they're giving the Biden team an opening to say, oh, wow, you say things are bad, you don't pass the bill to secure things. You say things are bad, but you can't even find evidence, so you fabricate a story. So to me, this makes no sense. They did her a real disservice. She will recover, but this is going to be something in terms of immigration that I think stays with the GOP for some time to come.
Did she fall off the short list for vice president based on the reaction that we've seen here, Rick, or her propensity to ham it up to the camera? Both of those would seem to run against Donald Trump's preferences for a second.
Yeah, I'm not exactly sure the premise. I mean, is Senator Britt on the short list? There's some wonderful things that are attributable to her at the very beginning of her public career here. But experience is not one of them. And I think every lesson I've ever learned about vice presidents is somebody with some experience helps you out a lot. So I think that she is still considered, I think, one of the up and coming Republicans in the nation with a really great future ahead of her. And so whether or not that attracts the attention of Donald Trump and what he's looking for in a vice president, I would not begin to speculate, but I don't think it hurts her with her ambitions within the caucus. We talked a lot about this on the State of the Union night. I can't remember a single person who hit it out of the ballpark
on a response to the State of the Union, either an R or a D, and I think she just kept that long streak rolling.
Yeah, I guess that's fair, although I still point back to Bob McDonnell. I feel like he got out alive back in the Obama days, but still. I mentioned to Jeannie, Rick, this $10 million haul for Joe Biden. They're spending, the Biden campaign, $30 million on an ad blitz that accompanies the roadshow here. He's going to 3 swing states over the course of the next couple of days. And this new ad that they've put together is actually pretty well produced, and it opens with him joking about his age. You've probably had a chance to see it. They play him against Donald Trump over the course of the ad. Is it smart to address the age issue head on in an ad like this, Rick?
Yeah, I mean, clearly the Democratic strategists associated with the campaign have figured out that they got to go early with an ad campaign. I mean, you hate to spend that money today when you know you're going to need it later on in the campaign. But I think they see the polls, they see the hesitancies on his age, and they think, well, you know, we're not going to get anywhere on convincing people the economy's better off or his plan for the border is good unless they can get through the age issue. And so literally addressing the age up front with a big buy like this, coming off the heels of a successful State of the Union, I think is a really smart play because it is a filter. And if people can't see past an 81-year-old president running for re-election, they're never going to get to the issues that matter for him.
Jeannie, President Biden was asked over the weekend if he's going to debate Donald Trump, and he did not commit to doing debates. It depends on his behavior, was the quote. Told a reporter who asked whether he planned to show up for the debates. Is this in question here? Should Joe Biden plan to boycott a debate with Donald Trump?
You know, I think in the end, I, of course, would love to see them debate. I think we should always be privy to debates between the two challengers. But, you know, maybe this is after Joe Biden heard Donald Trump on the stage in Georgia mocking him again for his stutter. You know, I'm not sure, but I have to say I do agree with Joe Biden to the extent Donald Trump would have to behave. We all remember the chaos that was the first debate last time around. And so, you know, should we have them? Absolutely. But Donald Trump has been skipping them and ducking them for a long time. I think they should both agree to debate, but they do have to follow the rules and they have to behave. And I don't know at this point that you could trust Donald Trump to do that.
Remarkable, Rick. He boycotted all of the primary debates, Donald Trump, that is. Does Joe Biden make a name for himself by boycotting the general election debates?
First of all, I think anybody who agrees to a debate with Donald Trump is either crazy or stupid. I mean, here's a guy who's totally unchained to facts, and he will use a debate to conjure up every kind of conspiracy theory and fabrication that he can. And here's, you know, poor Joe Biden, President of the United States, is completely addicted to facts. He's not a spinner. He doesn't know how to aggrandize his own positions. He's completely ill-equipped to be on a stage with a guy like Donald Trump. Every news media organization that's interviewed him or had him for town halls have suffered under the same consequences of how do you fact-check a guy in real time in a situation like a debate? And the answer is, you can't.
So maybe there are no general election debates. This campaign can still get a lot stranger, as we will learn with Rick and Jeannie. They'll be back in hour 2. For more analysis, we'll add Kaylee Lyons to the conversation. Also, we'll be talking with Congressman Seth Moulton. Hour 2, straight ahead.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Joe Biden drops a new budget, even if we still don't have an old one. Welcome to the fastest show in politics as the White House makes good on its annual spending plan. The wraps are off, and we've got headlines. I'm Joe Matthew in Washington, here on Balance of Power alongside Kaylee Lyons. Have you gone through the whole budget yet?
It's pretty long.
It is.
180-something.
That's correct.
Pages. But we know the top lines, and it's a big budget. $7.3 trillion requested for fiscal year 2025, about $1.7 trillion in total discretionary spending. But the White House is arguing, actually, if you look over the course of 10 years, this is going to lower the deficit by $3 trillion. And in large part, that's due to higher tax rates that this administration wants to see on billionaires and companies.
Okay, so you just put your finger on it. This is the issue here, right? You don't get these tax hikes passed.
Right.
A minimum billionaires tax and a higher corporate tax rate, then none of that deficit reduction can happen. And no one thinks those tax hikes can pass. So they call it an aspirational budget, a statement of values.
Yeah, a lot of this is signaling because, of course, this is a budget that President Biden is presenting in the middle of his campaign for re-election. So when he points to things that he wants to do, childcare, universal pre-K, lower the burden on homeowners, this sort of thing, it's a lot of political signaling. But to your point, aspiration and reality, not necessarily the same thing. And unless you have the White House and both chambers of Congress, really hard to get the things you want over the finish line.
That's right. It's kind of like a script from the State of the Union.
Yes.
Now they take it on the road, and we have to remind ourselves we're still not living under a budget for the fiscal year that began last October.
Right.
So why should we start now?
And we're only 6 months into this fiscal year, halfway there almost, and still not having 6 appropriation bills done. But welcome to Washington. It's exhausting
Monday
down here. So let's take a break from Washington and go to New York and get a check on the markets with Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. We've got the Dow, the S&P, NASDAQ, all trading lower right now as we kick off the new trading week. The S&P lower now by 7, narrowing its losses today, but still down 0.1%. Traders finding little encouragement to keep pushing the stock market higher. We've got the Dow down 22 now, a drop there of just under 0.1%, while the NASDAQ Composite Index is down 27, a decline of 0.2%. 10-year at 4.09% with a 2-year that's now yielding 4.51%. Spot gold up 0.1%, 21.81 the ounce, and West Texas Intermediate crude flat on the day right now at $78 a barrel. Bitcoin keeps on going, up another 4.4%, 72,495 on Bitcoin. MicroStrategy, meanwhile, up 15% today. MicroStrategy bought another 12,000 Bitcoin for $821 million, the second largest purchase by the enterprise software maker since it began acquiring the cryptocurrency almost 4 years ago. Again, Bitcoin today up 4.4%, while MicroStrategy now up by 14.6%. Recapping stocks lower, S&P down now by 9, a drop of 0.2%. Balance of Power continues. Back we go to Washington, and once again, here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much with the check on the markets in New York. And, you know, Joe, typically, if you were to say something like we're going to quadruple the tax on stock buybacks, raise the corporate tax rate to 28%, financial markets wouldn't necessarily react really well to that.
Right.
And yet that's exactly what we got in the budget outlined by President Biden. Doesn't seem like it's making too much of a dent, which probably speaks to the fact that the market is acknowledging that the likelihood of this becoming reality is probably lower than it is higher.
Yeah, it tends not to be a pass-through. There's going to be a debate. The question is, will there be a budget at the end of that debate? And as we'll discuss coming up with Congressman Seth Moulton, we haven't figured out how to do it this fiscal year. So why would one in a campaign cycle be any different? And that's going to be a big question here. Although Republicans did mark up a 2025 plan last week. Speaking of aspirational, everyone's dancing to their own music. Mike Dorning knows about that music. He's been covering Washington for a minute, and he's with us now. Bloomberg's deputy congressional editor. Mike, it's great to see you. That's how this works, right? The problem is this year, we haven't figured out how to keep the lights on. And
we're in a total gridlock at the moment because there's a very different view of what the government should be doing. They're blocked, fighting each other. This budget should be viewed as aspirational. This is what Biden
I'm using all the right
would
words.
do if he were reelected and got not only a Democratic Congress, but a Democratic Congress that didn't include people who disagreed with him, like Joe Manchin. That said, this is like, we had the State of the Union speech last week. This is a little bit of how the rubber meets the road with that vision that Biden, presented. And as far as like a budget getting done in an election year, I give the chances very low. Usually, or often what they do is just wait until after the election to deal with like how they're going to spend.
So could be looking at another CR after September 30th of this year, after the series of CRs that were kicked off after September 30th of
Yes, but
last
that would
year.
be kind of different. It wouldn't be as dysfunctional. It
Sure.
would be basically saying, hey,
This is what it's come
we'll
to.
wait till after the election, then we'll see where we all stand,
Yeah.
and then we know who has what kind of power, and then we can make a deal.
Well, and just for the dose of reality, Steve Scalise, the number 2 in House Republican leadership, just said they reject Biden's budget proposal. The price tag, he says, of the proposed budget is yet another glaring reminder of this administration's insatiable appetite for reckless spending. Goes on to say the budget doesn't just miss the mark, it is a roadmap to accelerate America's decline. So I guess there we have it, Mike.
They're not gonna. If Biden thinks it's a good idea, gosh, we'd be for it.
That's gives you a sense of where we're starting here. Can we maybe back up a second before we talk to Congressman Moulton, Mike? Are we going to shut down on the 22nd? There's no guarantee that this next package of 6 bills will get done either, right?
There's no guarantee. That said, I've continued to view that the Republicans and the Democrats have both shown their hands on this, that neither side wants a shutdown of the government in an election year. Speaker Johnson has signaled again and again that he is willing to come to a deal to avoid a shutdown, whether that's kicking the can down the road as he did every other time, or actually reaching the ultimate deal as he did with about a quarter of the funding for government. So I wouldn't expect there's much of a likelihood of an actual government shutdown before, in this fiscal year at least.
How about that?
All right.
At least there's this.
At least there's that.
Yes.
Although we'll see. A lot can happen in
right.
the next 2 weeks. Mike Dorning, who is our deputy team leader of congressional coverage here at Bloomberg, thank you so much for joining us. And now joining us is Congressman Seth Moulton, Democrat from Massachusetts, who, of course, is very much involved in all of these different spending battles. Congressman, thank you so much for coming back to Bloomberg Television and Radio. Do you have an understanding of where we stand in these next 6 appropriation bills that need to be passed by the 22nd? Are we going to get another, I guess, mega bus is what we decided to call it? What's the plan?
Well, that's definitely the plan. The plan is to do exactly what we did last week, which is combine these appropriations bills together, work out the differences, and then pass them as one package against the objections of the extremist Republicans who always vote against just simply having a budget, basically. So that is the plan. The challenge is that this group of appropriations bills is just more contentious. It's more challenging. And I was speaking with a Republican colleague last night about this. I mean, he's cautiously optimistic, but at the end of the day, it's up to the Speaker of the House to quell the opposition on the far right. And the Speaker's worried that if he goes too far, they're going to do the same thing to him that they did to Kevin McCarthy, which is just kick him out of Congress or out of the speakership.
What do you make of, sorry, Congressman, it's good to see you, by the way. Welcome back. What do you make of Steve Scalise's statement here? Kayleigh just mentioned this. It's a roadmap to accelerate America's decline. That's quite a starting point when it comes to a debate, isn't it?
I mean, this is just typical for Steve Scalise. I mean, if President Biden were to save a young girl from a fast-rushing stream, Steve Scalise would criticize him for it. So it doesn't really mean much of anything at all. The fact of the matter is the president has put down his vision for the country, and that's important for a president to do. I think it's especially important for a president to do in an election year. The contrast here with Republicans is that they want to preserve these massive tax cuts for the wealthy that have ballooned our deficit. They are the ones who have been terribly fiscally irresponsible. I mean, the deficit just went up like trillions of dollars under Donald Trump, and they want to go back to that again. That's what they're defending. So when President Biden just says, look, I think everybody should pay their fair share, it's important for Americans to know that Republicans disagree with that. They think the rich should pay less.
Well, of course, the president is also requesting a few things from Congress, including renewing his call for supplemental funding for Ukraine and American allies and border security. We all know the fate of that original supplemental deal after it was struck, very quickly died. Something did indeed pass the Senate. Very unclear what happens in your body going forward, sir. But we do know that perhaps a discharge petition could be one way around House Speaker Mike Johnson if he decides not to put Ukraine aid on the floor. Are you confident that that would work?
No, I'm not confident. And this is a very big problem for our national security, because supporting Ukraine is not just about defending these amazing freedom fighters in Europe. It's about protecting Europe from the onslaught of Vladimir Putin, and it's about sending a message to Xi Jinping in China that democracies are going to stand together, that allies are going to stand up for each other, and that ultimately that means he should not start World War III in the Pacific by invading Taiwan. So I think people forget just how high the stakes are here. Now, most Democrats and Republicans in Congress do understand this. The issue is that Republicans, again, are feeling pressure from the extreme isolationists on the far right who are against funding Ukraine, who just simply don't understand the basic principles of national security. Now, to Speaker Johnson's credit, I think that he understands that this is important, and in his heart of hearts, he wants to do it. The question is whether he'll have the courage to stand up to these Freedom Caucus extremists and do the right thing for our national security, the right thing for freedom and democracy, or whether he'll cave to them because, again, he's afraid that they'll kick him out of the speaker seat.
Well, the fact that we're still asking about this does make you wonder, Congressman. Speaker Johnson has not shown his cards on this. He says he'll work against the discharge petition that Kayleigh mentioned, but we have no sense about when or if ever Ukraine funding comes to the floor. Are we entering a world now in which Ukraine may never get more funding from the U.S.?
I mean, that is a distinct possibility under this Republican leadership. I mean, the speaker has not been able to do anything. He doesn't have a plan. His biggest accomplishments to date are not shutting the government down. And even that, he's had to go against the extremists in his caucus to do. So, I mean, this is what Americans get when they have this Republican Party that is in the middle of a civil war leading the House of Representatives. There's no leadership. There's no plan. I wish I could tell you that this is what we're going to do. Here's how we're going to go about it. Here are the challenges. Here's why I think it will work. But there is literally no plan. All we know is that there are good Republicans who want to do the right thing. Democrats are standing by to do the right thing and inevitably bail the Republican Party out when they can't lead. But we are absolutely facing the possibility of both a shutdown and the possibility that we abandon Ukraine and send a message to China that, hey, go ahead, start a war in the Pacific because we're not going to do anything. And that's ultimately very dangerous. There are truly American lives on the line when you think about the long-term consequences here.
Well, and of course, Congressman, it's not just aid for Ukraine that is in question. Aid for Israel is tied up in this as well. But I'd like to ask you about some of the rhetoric we heard from both President Biden and Israeli Prime Minister Benjamin Netanyahu over the weekend, when Biden, in an interview, suggested that if Israel were to invade Rafah, where there are 1 million Palestinians who have sought refuge there, that would be a red line. Netanyahu went on to say that his only red line is that October 7th does not happen again. But, sir, what good are red lines if the U.S. still says it will stand by Israel? Support for Israel, military support for Israel will continue. What leverage does the president actually have here?
Well, let's just step back for a minute. I mean, this is an incredibly complicated and divisive situation, but there are a few principles that we should all agree with. First of all, Israel has a right to exist and an obligation to defend itself. But second of all, you're not going to ever have peace in the Middle East if you don't have Palestinian rights. And I think that for all the critics of a two-state solution, no one's been able to come up with a better idea. Palestinians and Israelis both deserve to live in peace and freedom, to have democratic rights, to have a national state, and ultimately, both Israeli and Palestinian innocent people should not be killed. And the scope of the human tragedy unfolding in Gaza is just is just unbelievable and heartbreaking. And at the end of the day, as we learned in Iraq and Afghanistan, speaking as a Marine veteran here who's fought in a counterinsurgency, if Netanyahu continues killing so many innocent civilians, he's going to lose the war because he's just serving as a recruitment tool for Hamas. So the issue here is that Netanyahu fundamentally has to go. What he's doing is morally bankrupt. It's militarily bankrupt. It's not going to work. And so therefore, what he's really doing is pursuing his own interests and not Israel's. And you hear this from the Israeli people. I mean, Netanyahu has the lowest approval ratings I think we've ever seen for a prime minister. Even in the midst of a war, people can't stand him. I had the opportunity to speak with a hostage family just after the State of the Union. And I brought up this concern. I said, look, we support Israel's right to defend itself. Everyone should want to get rid of this terrorist organization, Hamas. You're never going to have a Palestinian state if Hamas is around. But I really disagree with what Prime Minister Netanyahu is doing. I think his strategy is failing. And without missing a beat, this hostage family chimed in and said, well, his first failure was the fact that he let our guard down with his political division, and October 7th happened in the first place. So there is just widespread dissatisfaction with Prime Minister Netanyahu in Israel. And so when you hear President Biden just echoing those same sentiments, I don't think anybody should be surprised.
Well, we're always curious your thoughts on our policy in Israel as well as Ukraine from your view on the Armed Services Committee and as a combat veteran, Congressman. I'd like to, in our remaining moment, tap your expertise as a member of the China Select Committee. It appears that the TikTok bill that could result in the banning of TikTok will end up on the floor for a full House vote on Wednesday. Will it pass? Should it?
Well, first of all, let's be clear. This bill does not ban TikTok. It just bans the Chinese Communist Party from essentially owning and influencing. Right? That's a very important distinction, because what TikTok is doing is sending out messages to all its users to call people like me and say, don't ban TikTok. Well, that's not what we're doing at all. We're not trying to ban TikTok. I hope it gets a vote. I think that we don't need the Chinese Communist Party telling our kids what to watch online, which is essentially what's going on here. And I just want to see TikTok survive and thrive, but under American protections, in American hands. And everyone, I think, here in America should want that too.
All right, I won't call it a ban. I'm putting that out there right now. It's a divestiture bill, right?
Right, but
Or
if the
you get banned.
divestiture doesn't happen, right?
I'm putting it out there.
gives them
I'm
an
still
option.
calling it Twitter, not X, Congressman. I have a lot of problems. Congressman Seth Moulton, it's great to see you. Welcome back to Bloomberg, the Democrat from Massachusetts, talking about many issues with us here today. We're going to continue that conversation straight ahead with Gene Soroka from the port in L.A. Alongside Kaylee, I'm Joe. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? Well, I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo. We can do that. Bingo's my cockapoo. Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blade, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision, that's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Sure,
It's
they might
okay.
do that. Even if they do, let American companies come back to America. I would say to China, if you're building a plant on our border to build cars in Mexico and to sell them into the United States, I'm putting a 50% tariff on all those cars.
He said 50, right?
Yes.
50?
50.
That's Donald Trump from earlier, a stem winder. He was on the phone for like a half an hour. Like, where is he exactly? what phone are we doing? So there was a lot to pick through there, but he said 60% before in terms of across the board, which would result, based on the number crunching at Bloomberg Economics, would result in a divorce. That would be the end of our trade agreement, likely, or a relationship on any level.
Yeah.
Just stop all imports and exports. So you have a lot of questions here about how this would impact trade, where we would go, and what that might mean for supply chain. And that's where we start our conversation with Gene Soroka, who is with us in studio today in Washington. He runs the busiest port in America, as Kaylee mentioned, the Port of LA. And Gene, it's great to see you. Welcome back.
Joe, Kaylee, good afternoon. It's great to be back in studio.
Well, sure thing. Welcome back to the nation's capital. Do you take commentary like this seriously? Because it would have a massive impact on the operations of your port.
Well, you have to, and it would absolutely be disastrous, Joe. I think the look at this is that for every 4 containers we move through the Port of Los Angeles, it creates 1 job. 60% tariffs or whatever he's talking about means inflation to the American consumer. The U.S.-Mexico-Canada agreement was designed just for this purpose, to enhance trade, and Mexico has leapfrogged China as our largest trading partner. All of this makes very little sense.
Well, you say Mexico is the largest trading partner, but surely if we were to see tariffs of this size, it would mean that there's just not a lot of trade coming from China at all, right? You would just, all of that cargo that would make its way through the Port of LA likely wouldn't be coming, right? I mean, can you quantify the amount of jobs realistically that would be lost in that scenario? If it's, what'd you say, 4 containers, 1 job?
That's right, Kaylee. 1 in 9 jobs in Southern California rely on our ports. That's about 1 million people that go to work every day counting on us to do our job. About 57% of trade at the Port of Los Angeles back in 2022 was with China. That dropped down to 53%, so fractionally. But as you keep lopping off the top of this, it has a great impact economically and on the people that go to work every day.
Well, this is obviously something that's going to take time to figure out. It won't be until after the election, obviously, if we know this is a real conversation. Although, to Kaylee's point, the Biden administration has not relaxed tariffs left over from the Trump administration, should it?
That's right. And what we see is that there's no reason the 2 biggest economies in the world can't trade together. But it's been in discussions that I've had with the administration, while footwear and toys and clothing are not of consequence, where we get our chips, where we get our software is. And making sure we have rules of engagement on international trade are front of mind to the administration.
Well, of course, there was a time when you would come join us here on Bloomberg TV and radio during the aftermath of the pandemic, when everything we had to ask you about was supply chain. And that also had a relation to China, because China closed down a lot of production facilities because of COVID. And therefore, you know, things were delayed in getting produced and getting out of the country and into U.S. ports. Are you seeing any supply chain bottlenecks anywhere now that China has reopened? But perhaps we now have the issues of the Red Sea and ships diverting around the coast of Africa. What is happening in real time?
As always, Kaylee, there seems to be a lot on the minds of logisticians and supply chain experts. China exports were up 10% in the first 2 months of the year. And my projection for Q1 at the Port of Los Angeles is 20% growth. Wow. Mainly on the heels of having a long-term dock workers contract in place. We've got another 5 years of certainty with that respect. But drought in the Panama Canal, security concerns in the Red Sea with lower crossings through the Suez Canal. Most importers and exporters that I'm visiting with now on those topics are telling me they're pointing more cargo towards the Southern California gateway.
Interesting. Has the administration solved this problem? We were getting daily reports of attacks against ships by Houthi rebels. We spent some time bombing their installations. Don't seem to be reading those stories any longer. Just to follow on to Kaylee's question, have we seen improvement there, or some ships pointing back into the Red Sea?
Not really, Joe. And what we need is a global response to this.
Yeah.
When I was based in Dubai working for the private sector, American President Lines, we had meetings with NATO on a regular basis at their Africa headquarters in Djibouti. We were varying speeds and timing schedules of our vessels to protect our crew, assets, and cargo. This is not going away anytime soon.
Wow.
Many have changed their routes to go around the Cape of Good Hope, adding transit time and cost, think of fuel burn, to the supply chains coming to the East Coast and Gulf, as well as that lifeline of manufacturing to Europe.
Well, so what are they waiting for to go back into the Red Sea?
Well, safety and security. I don't think we have any level of confidence right now that ships can pass unimpeded through the Red Sea to the Suez Canal. And again, that concern for crews is front of mind to all of us.
Well, and you mentioned how that dynamic, as well as increased volumes from China, are going to translate, you think, in your estimation, to higher volumes at your port and ports on the California coast. And you mentioned the contract with dock workers that is now in place, but are there enough workers to go around to take those upticks in volume?
I think we're in pretty good shape. Okay. We're running at about 75 to 80% of normal capacity from what I see at the Port of Los Angeles. But we're not immune like anyone else in the nation. There are almost 8.9 million jobs open. We have to continue to do the best we can to attract, recruit, and retain people in our industry, from the dock workers to truckers and warehouses to the logisticians and IT specialists that we need.
Does the last mile remain the biggest challenge for you on that front?
I think really what it is, Joe, it's the velocity of cargo. If there's anything we learned from COVID, this port has to be a transit facility, not a warehouse for resting containers. We've got to balance all these interdependencies with rail, trucking, and warehouse just as much as we do getting that cargo on and off the vessels. 12,000 lifts off and onto ships coming at the Port of Los Angeles on average. That's the best in the business today.
Interesting. We also today, and you kind of jogged my memory when you were talking about investments you need to make into AI, for example, technology. Part of the budget that President Biden put forward today does include introducing kind of AI offices, even at the Department of Labor, trying to capitalize on that technology. How do you view AI changing the way that operationally ports will be handling things into the future? Does that get rid of workers, or does it just ease the operations through which they're undertaking? How is AI going to change the future of shipping?
Yeah, we cannot leave the worker behind. When technology is moving faster than ever before, AI can help us with predictive and prescriptive analytics. You see something happening on a regular basis, how do you react in quicker time? That's the basis for it. With our port community system, the Port Optimizer code developed by General Electric, we can now see upstream some 40 days before a vessel comes into LA. Better to plan land, equipment, and our skilled workforce. And that's in part why I'm here this week in Washington. I'm with a delegation from the Los Angeles Area Chamber of Commerce led by CEO Maria Salinas. We're going to be meeting with elected officials and policymakers to campaign for more interest in the Southern California region, including our port.
We wish you luck with the meetings, of course. And while we're sitting here with Gene Soroka, of all people, I have to acknowledge the date. We were talking about this a little bit earlier in the newsroom. March 11th, 2020 was the day the World Health Organization declared COVID a pandemic. It was on that same day, remember, the NBA canceled the rest of its season. That same day, Tom Hanks announced he had the virus. People started to freak out. It started to feel real. It was the same day then President Trump imposed the new travel ban from Europe. Your life, your world, your whole career, and the operations of that port changed that day too, didn't they?
It sure did, and it's a very, very strong reminder of what we went through. I lived in China during SARS, and this became 100, 1,000, 10,000 times worse than what we witnessed on the ground there. Stopping all work, but having a selfless opinion of how we were going to keep the American economy moving, from our dock workers to all those in the supply chain, was just so inspiring at that time of great uncertainty.
I made us late by bringing this up, but I'm just struck by the day. Everyone should go outside, breathe fresh air. Actually, go inside and breathe fresh air. Go out to dinner. Do something you couldn't do.
Stand within 6 feet of other people.
That's right. Go
do
hug
all the
someone.
things we have the privilege of doing now.
God knows it. Gene Soroka, great to see you.
Great to see you.
Thanks for being with us here, Director of the Port of LA. We're late, but get you up to date on news now. World and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. And just to prove your point, you knew it was bad when the NCAA canceled the March Madness tournament. That's when you knew it was really heavy. Thanks for the time. The White House expects the U.S. economy to cool this year, inflation to remain stubbornly above the Federal Reserve's target. President Biden's budget, just released a half hour ago, assumes economic activity will increase 1.7% this calendar year, well below the 2.1% median forecast of economists surveyed by Bloomberg. Democratic Senator Robert Menendez of New Jersey pleading not guilty to revised charges in an expanded bribery case, and he was rejected his request to delay the May 6th trial. Global news 24 hours a day, whenever you want it, with Bloomberg News Now.
7:40 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They both do remain lower. Little change on the Dow Jones Industrial Average right now. Traders finding little encouragement to keep pushing the stock market higher. Right now, the Dow Jones Industrial Average, we'll call that flat on the day, with the S&P down 9, down 0.2%, while NASDAQ is down 45, a decline of 0.3%. 10-year 4.09%, with a 2-year right now at 4.52%. Spot gold, little changed, up just about 90 cents the ounce to $21.79. West Texas Intermediate crude is down 0.2%, 77.88 a barrel. Bitcoin up 4.5% to 72,515 on Bitcoin. Apple shares are pushing higher, up 1.4%. Apple is preparing to open its 8th store in Shanghai this month, adding to its largest retail network after at a time when iPhone sales in China are slowing. We do have Apple shares pushing higher today again. Apple right now is advancing by just about 1.3%. Again, recapping, stocks are mixed, with the S&P lower now by 8 points, down 0.1%. Balance of power continues. Back we go to Washington once again. Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you. Welcome to Balance of Power, the fastest show in politics here on Bloomberg Radio and TV. As the president starts the road trip following the State of the Union, that has come with a couple of interviews, and he cannot shake the situation in Israel right now. This is obviously a massive story, Kaylee Lyons, that is following the president wherever he goes, having put his support behind Israel.
Yes.
Support that he's trying to check at this point. Now talk about a temporary port, doing airdrops, trying to get anything, do anything to get aid to those who've been affected in Gaza, despite the fact that Israel is our ally. It's a strange scenario.
Right. And the U.S. is still having to work around an ally to get the aid it would like to deliver to Palestinians into Gaza. And of course, Ramadan has now begun. It started yesterday, Joe. And the initial goal with this temporary ceasefire the U.S. has been heavily advocating for was that it would begin before Ramadan. Obviously, that is not happening. And it's not clear at this time if and when a ceasefire is actually going to come, as there's still so much difficulty between Israel and Hamas in regard to the state of hostages that are being held.
And a great question of, now that Ramadan has begun, do we wait a month now potentially for another window at a ceasefire? The president did warn, when he was asked by a reporter, warn Israel openly in the media against invading Rafah, that town on the Egyptian border. He actually used the term red line. Let's listen.
There's red lines that if he crosses, and he cannot have 30,000 more Palestinians dead as a consequence of going after. There's other ways to deal with the trauma caused by Hamas.
So on that note, let's bring in for a reaction our political panel, Rick Davis and Jeannie Shan Zaino, Bloomberg Politics contributors. Jeannie, just to begin with you, this language from President Biden talking of a red line, is there a red line that actually exists that is going to make the U.S. not support Israel, not provide military aid to Israel? What red line is he talking about?
You know, I found the language terribly confusing, and I just want to follow on and say happy Ramadan to all our Muslim friends. You know, you mentioned, Kaylee, that we were looking at a potential ceasefire. And of course, Joe Biden said that just in advance of the Michigan primary. He said within a week. Of course, that week has come and gone. I believe it came and went last Monday. That's a big embarrassment to the president. He then is caught on this red mic and has this interview talking about a red line. It was very unclear to me what red line he is talking about. He said, you know, we can't have 30,000 more Palestinians dead. That's not much of a red line. You know, what seems to be happening is that the administration is saying, if Israel goes into Rafah, if they confront these 4 Hamas battalions that are sitting there, that is something of a red line. But what they would do then is up in the air. Would we stop giving aid? Would we stop giving weaponry? Would we make it conditional? If that happens, that would be a huge unprecedented switch for the United States of administrations of both parties. So it is a big question, very unclear. His rhetoric is not matching his actions, and that's going to be a problem for the president politically in other ways as well.
Rick Davis, Joe Biden knows what those words mean. Red line. It was 2012, of course, when Barack Obama said that with regard to Syria. A year later, with regard to Syria's use of chemical weapons, a year later, they were used in a suburb of Damascus. And it went down as a real mistake for Barack Obama to have used those words. It followed him for the rest of his presidency. Joe Biden certainly remembers that. Did he just do it again?
Yeah, it certainly is reminiscent of that instance. I remember my old friend John McCain warning Barack Obama that if he draws a red line, that the prestige of the United States, our credibility around the world is at risk if those red lines aren't respected. In this case, it wasn't, and Barack Obama backed off, which I think sincerely hurt our country's standing, especially with our adversaries. Here is an example where we're drawing red lines with our allies. There's no stronger ally than ours in the Gulf. And so I really wonder, what is it that is a red line with an ally? And what is the punishment if you cross the red line? These are the kinds of things I think that we get from President Biden. You know, you call it a gaffe, you call it a misunderstanding. The White House has had to walk back many of these in the past, some related to very hot button issues like Taiwan, and talking about, you know, strategic ambiguity in a way that doesn't actually reflect it. And so you can say that we're getting used to it, but it doesn't actually help the debate. This is a very tenuous situation in Israel. As Seth Moulton said, Israel has a right to defend itself, and Palestinians have a right to live. And so how do you make that work? And at the same time, we have hostages, American citizens, still being held hostage by terrorists in Gaza. These are unacceptable situations, and I wish the president would be more clear about his intentions with President Netanyahu and the entire government of Israel. They need to know what our stance is, and we need to stand behind that in a way that is credible to the people of Israel at the same time.
Well, on that credibility point, Rick, aside from whether or not the president intended to say with this phrasing, red line, maybe it was a gaffe, as you suggest, the intention, though, it seems that this administration is really trying to sharpen its language, specifically when talking about Prime Minister Netanyahu and what the Israeli government is doing in Gaza. And yet, what really realistically leverage does the U.S. have? If the U.S. isn't going to walk away from Israel, how at all, if you can, how do you change behavior?
Yeah, look, I mean, that's why they call it diplomacy. It's an effort of trying to find common ground and then work beyond that. There's no question that there's plenty of common ground between the U.S. and Israel. And there's a very symbiotic relationship with our intelligence divisions, with our governments, with our militaries. And all of that has to be put to work in a very significant fashion. And so, you know, we saw a burst of diplomatic activity at the very beginning of this fight. President himself went to Israel. Maybe it's time for the president to go back. It's not a great time to be messing around with Gulf shootouts in an election year. We've seen how that works in the past, and it usually doesn't work out well for the incumbent administration. But this is a classic example of having to put the country's interests ahead of your own political interests. And in this case, the United States' interest is in finding a common ground with Israel so that the people of Palestine can start to live their lives, get the aid they need to survive, and start a process where there's an end game to the fighting. Because continued bloodshed is not in the Israeli interest, obviously the Palestinian interest, and especially not in the United States' interest.
Jeannie, what do you make of the public commentary from Joe Biden, not just in the State of the Union address, but after the State of the Union, the so-called hot mic moment when he told Jerry Nadler he was going to have a come to Jesus with Bibi? Did he know that was going to get out there? Was that the point? Now this red line in an interview over the weekend, are we negotiating through the media?
Yeah, I'm not convinced that it was a hot mic moment. I think Joe Biden has been around a long time. He knows this game. I think he knew perfectly well what he was saying and that what it was going to be reported, to your point. And they have not been quiet about this. Let's not forget, you had senior administrative officials meeting with Benny Gantz just the other day. He is the leading opponent for Netanyahu should there be an election forthcoming in Israel, potentially. And so they are being clear publicly. We assume, we don't know, they are being clear privately. And we don't know what is happening behind the scenes. One big problem here is that the political interests of Joe Biden and Benjamin Netanyahu completely diverge on this point. And that has been part of what has triggered this. And I think the other thing everybody should pay attention to is the suffering we are seeing. If people had a chance to read Nicholas Kristof's piece over the weekend, those horrific text messages, we aren't getting a lot of images out of Gaza because, of course, we don't have a lot of live camera coverage there, but we are getting some, and they are horrific. And so I do think the president has an interest, not just politically, but from a humanitarian perspective, into underscoring this. You tell 1 million people to go north to Rafah. Where the heck do they go if you attack Rafah? This is an enormous challenge for the administration, and we are giving aid. We are the #1 supporter of Israel for good reason over the years, but we do have a right to condition that aid just as they have a right to defend themselves, and we should be able going forward to figuring this out. The president's red line is very unclear to me. I think it's unclear to everybody, but it doesn't serve the interest of the United States to support what is happening if they do go into Rafah to attack these 4 battalions.
Jeannie Shanzano and Rick Davis make up our signature panel here on Balance of Power, Bloomberg Politics contributors. They will be back with us for the later edition of Balance of Power that starts at 5 p.m. Eastern Time. We'll have a lot more to talk about then. Many thanks to Rick and Jeannie being with us here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. As we consider the to-do list, Kaylee, lawmakers will be back in town in a minute, and we're going to get back into business here. Actually, the House and Senate are both in today, if I remember correctly. But we do not have a deal to avert a shutdown on the 22nd of March. And we thought we'd ask Jonathan Samari about the menu of options here. From Bloomberg Government, Jonathan, good to see you. Thanks for stopping by. It looks like a TikTok, I won't call it ban, divestiture bill.
Yeah, we can just call it the TikTok bill,
TikTok
right?
bill, fine.
Yeah.
That gets action long before a funding package, correct?
Yeah, that's scheduled for a vote on Wednesday. It's interestingly scheduled as a suspension vote, which means that they're counting on a 2/3 majority to pass that. But what's interesting about that is that bill passed out of committee last week in a 50-0 vote. Obviously, kind of an unheard of bipartisan vote in this current Congress. Since then, former President Donald Trump has come out against this bill, having previously supported banning TikTok when he was president. Now he's against it. We've seen that he has the ability to move Republican votes, so there's a lot of intrigue about what's actually going to happen on the House floor now this Wednesday, and then what will happen if it does move to the Senate.
But even some members of Congress, Republican members of Congress, who are very closely aligned with the former president, have been very vocal in pushing for this ban, right? I mean, unlike with the border bill, when we did see it seemed a great deal of influence was able to be exerted. Is it as easy for the former president to exert influence on this particular issue when it seems like everyone on Capitol Hill is a China hawk?
Yeah, I mean, that you make a good point. There are more motivations just on their own for a lot of Republicans to support this. It's popular to be tough on China. It's popular to be tough on tech companies. But what we're seeing is this weird mix of opposition. You're seeing some folks on the left and on the far right saying, this is... it's potentially anti-democratic to ban a specific company, and it's potentially raising free speech issues. So you're seeing an unusual breakdown here. It's not really strictly ideological. It's not, traditional Republican against Trump Republican. There are just some weird fractures here that makes it unclear what its future is going to be.
The Trump evolution is fascinating to me as he's now looking to Facebook for the answer. He put on Truth Social, you get rid of TikTok, Facebook, and Zuckerschmuck will double their business, referring to Mark Zuckerberg. But then we learned that Donald Trump met recently with Jeff Yass, who has a $30 billion stake in TikTok or ByteDance. and is a big backer of the Club for Growth, which has decided to align itself now with Donald Trump. Also, Kellyanne Conway is working there, being paid by Club for Growth to advocate for TikTok. And now suddenly because he was calling for the ban of TikTok until now.
He was. And now, again, as you point out, he has a significant campaign funding need. He meets with a major campaign funder. Nobody can say for 100% that one thing led to the other, but those dots are pretty close to being connected there. And Jeff Yass is a person who's put a lot of money into Republican campaigns over the years.
Okay, so this is going to the floor Wednesday. We'll see whether or not the former president's influence means it does or does not get across the finish line. Just quickly, we have about a minute left, Jonathan. We need 6 more appropriation bills to pass by March 22nd. Can that happen too this week, or is that a next week thing?
That's going to be a next week thing at best. The House has a short week this week. They're out. The Republicans have a retreat starting Wednesday. There are still negotiations going on. The big sticking point is the Homeland Security bill, which handles border policy. So that is really a tough thing, as we've seen over and over. So we'll see. They're not going to get it this week. We'll see if they get it next week.
The Greenbrier is where they're going.
Yes, in West Virginia. It's supposed to be very nice.
It is supposed to be very nice. I was talking to Billy House about this earlier. You guys have to stay in like a separate hotel?
Yeah, the reporters don't get to stay in the nice place. Come on, what are you talking about?
It's described as a world-class resort in West Virginia's majestic Allegheny Mountains with acres of pristine grounds and spaces, Kaylee, etched in history.
Very jealous. Jonathan Tamari of Bloomberg Government. Enjoy your stay at the other hotel. Thank you.
Well, I'll just be on the hill.
Okay. Thanks for joining us on Balance of Power. This is
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo. We can do that. Bingo's my cockapoo. Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, tomorrow, 8:30 a.m. Wall Street time, that is certainly our next focal point when it comes to investors and trading specifically. And as Bloomberg's Liz McCormick writes, this week, the U.S. bond market faces its own Super Tuesday of sorts. And that is, of course, the release of fresh inflation data that investors will use to predict when the Fed will start cutting interest rates. This is a big clue in all of that game.
Yeah, well, joining us for more on her story is Liz McCormick, Bloomberg News chief correspondent for global macro markets in New Jersey. Also writing today about what Fed officials and Fed Chair Jay Powell are signaling ahead of tomorrow's closely watched CPI report is Bloomberg News economics reporter Steve Matthews from our Atlanta bureau. So it's our world, of course. We hop from data point to data point, Liz. But given what happened with CPI last month, and the sell-off and the overheating concerns, this one's a little more important, I think.
Yeah, exactly. And, you know, Friday, net on the jobs data, when you filter through everything and you read all the reports through today, Steve knows better than I on this, but, you know, there were good enough signs of softness, right? The revisions last month, the unemployment rate going up, But like you said, we did get hit with CPI that was hot last time. And people are just a little cautious ahead of this number. I mean, the forecasts are showing that core is supposed to come down, but people aren't sure. You see the inflation swaps, which kind of bet on how this figure will be, are a little bit higher than the consensus. And we have a lot of supply coming, not to add too much to it, but these auctions, like today's went well, but yields are higher since the auction. We have a 10-year and a 30-year. So, people are, wondered, should we buy this stuff before the CPI? But some people did, but let's see if that works out for them.
Right, that 3-year auction. I want to talk about that in just a moment as well. But Steve, come on into the conversation, the importance of that CPI print and how it will factor into what we get from the Fed next week. Because we get certainly the Fed decision, we get commentary, we get a press conference, and then we get a new dot plot.
It's a constant refrain that you hear from the Fed that, you should never pay that much attention to any one single report. You have to look at the overall trend of how things are looking. But in this case, the January CPI was pretty bad and really jolted people. So the importance of this report is that this would not be just a single report. If you get a bad number, then it's 2 reports in a row, and that could kind of shake things up. It's locked in very much for the decision next week. There's going to be no change. Everybody understands that, and the markets understand that. What this is really setting the table for is the dot plot. The 19 FOMC participants all have to make their forecasts for what's going to happen with interest rates for the rest of the year. They were predicting 3 rate cuts in their December forecasts, and they have to update those numbers next week. And if you get a bad number, that could tilt the forecast, and you could get, instead of 3 cuts, you could get 2 cuts potentially. That's probably not likely, but it's certainly a possibility if you get a particularly bad set of numbers.
2 cuts. Because last time in December, Liz, even though the Fed, their median projection was 3, what a lot of traders thought was, 3, well, we're going to go ahead and say 6. And they've reined that in a little bit in the past couple of months. The multiplier effect, if you will. But it raises the question about to what extent that traders actually take that seriously if they were pricing in twice as many as the Fed was from a median perspective.
Right. And what's interesting, though, is, like you said, they were like 6, and then they came back. And then for a while, it seemed like, maybe, traders have got religion. They weren't going past the 3 dots, like Steve mentioned. But then after last week, they've leaned in. So now we have maybe, I think it's a little under 90 basis points for the whole year priced in now. So they went beyond the 3 dots. But what's interesting, and folks at Bank of America had a cool note about that. I mean, again, something Steve knows even better than I. But I think it'll only take 2 officials to move from forecasting 3 cuts this year to 2 to move that medium. I call it that much watched medium to 2. And like Steve says, it's not likely, but you do hear, I'm like, everybody seems to know that on the trading desk. It only takes 2. And I was talking to an investor, and he was saying, listen, I'm worried about the next year because I think for the 2025 dot, Fed officials forecast 100 basis points of easing. And he said, if we get a soft landing and inflation kind of goes at the pace it's going down, I don't think there'll be 4 cuts next year. So, and then Larry Summers last week was talking about the neutral dots. So, I mean, there's a lot to look at in that dot plot.
Well, and if you're Apollo's Torsten Slok, you don't think the Fed is going to actually do anything this year. Steve, come on in. I saw you kind of moving around here and listening as listeners.
Yeah, no, I agree entirely. It just takes two people to change to move the dots. And I guess the other thing I would say about the CPI, and everybody, it is Super Tuesday. It is a big deal. But of late, the Fed is forecast on PCE inflation by personal consumption expenditures, which is a different measure, not CPI. And PCE inflation has a couple of inputs. CPI is one of them. PPI, Producer Price Index, which comes out later in the week, is another. And there have been some weeks where CPI has come in bad. Couple days later or a day later, PPI comes in good, and both of those go as inputs to the PCE inflation. Now, I know sounds very technical.
You're killing
but
me,
it's like-
Steve. No, keep going.
You can get a bad CPI number and a good PPI number, and the Fed is going to look at the combination of the two. So even if you get a bad number, you have to pay attention to the data later in the week.
Well, that's right. For everybody watching and listening, there's going to be a quiz at the end of the show. But having said that, and let me throw this out to you both, that what I'm hearing, Liz, and let me first come back to you, is that it's just a reminder that even though we get a new dot plot, that could change again depending on the data points between the March data point and the next data point, survey. So I just feel like, again, it's just a reminder that the Fed is moving from data point to data point.
Exactly. And I think my team has gotten sick of me because I keep saying, to your point, Carol, like, I am almost sick of talking about these swaps trader. I mean, it's what we do, because you're right. It was 6, it's 4, it's 2, and the Fed is looking at all these numbers, and between now, like Steve said, they're not going to move rates in March, but between March and what people are saying is probably going to come in June, there's so much data. I almost feel like, can I keep up with this? Right? And then that's what the Fed has to do. And I want to add to something Steve said, not to add to our quiz later, but remember last time, and maybe us people like me want to not have to know every bit of inflation data, but we learned that, oh yes, CPI was bad, and then PPI was bad. And then everyone said, like Steve taught us too, more PPI goes into PCE, so that wasn't good. So now people are kind of worried about both, right? CPI and then like Thursday's PPI.
Well, okay, I'm going to change the subject just a little bit, broaden it out, and I want both of you to answer.
You're going to talk about Photogate? Is that what you're going to go? Oh, you're not going to go that
Carol
far.
explained everything to me earlier. I'm totally read in on Photogate, but I'm not going to go there right now. Steve, I want to talk about the wealth effect, because I know that the dual mandate that the Fed has is not about having anything having to do with financial markets and where financial markets are. But at the same time, what does the research say about the higher the stock market goes, the wealthier certain people feel, and what that does to spending, and then how that spending could drive up inflation?
Yeah, I mean, there is a wealth effect. I mean, you can look at the data, and there are different estimates of, for every dollar of additional wealth, a couple cents are spent, and it boosts spending. So to the extent that you do get a wealth effect, that you get financial markets that are roaring, which they have been, that does have an effect on spending, and that does affect inflation on the margin, maybe a little bit less than what's happening with housing prices. But yeah, it is something that they watch. But, they look at financial conditions more broadly. And it's interesting that, I mean, we have different financial conditions indexes, which are all moved higher by stock prices, but the Fed's index that they focus on is much more on borrowing costs, and borrowing costs have been high because of interest rates.
Right.
And they still view financial conditions as somewhat tight, even though stock prices have been going up.
Liz, I want to get your take on this too, because I could have sworn I was listening to Surveillance earlier this morning, and there was some talk about some folks buying Ferraris recently.
Sounds like a Tom King kind of question.
Is that right?
I'm in so trouble with my brother because the Dr. Capo, who has definitely a few Ferraris, but I just try to step back and listen and say, I know the stock market's done better. This brother's feeling better. I do think, like Steve said, the hard numbers, it's not that strong, but I think it's like sentiment. People feel better, and they look in their portfolios and say, wow, look at the size of that. Now, the truth is, the bottom line is if you have a job or not, right? You lose your job, that money sitting in the bank doesn't make you feel good. But right now, the economy's been holding in, even with the unemployment rate going to 3.9. Many people are still employed, of course. Some, sadly, have lost their jobs. But I do think psychologically that wealth effect makes you feel more confident. You're willing to maybe get a few things you kind of need, but not direly need, because you feel like, well, even if you have your emergency fund, we see more money plowing into money market funds. And that money's making good piece of change, right? Over 5% sometimes, or 4 and change. So I think psychologically that's making people feel better. although you don't get that in the polls, right? I mean, people are still worried about inflation as far as political polls, but yeah, it doesn't hurt to see even your retirement portfolio go up in value.
I'm looking for the Ferrari indicator on the Bloomberg. I don't think I see Ferrari go. Hey, Steve, come on back in here, because I do think about Jay Powell kind of set the table really well for us in terms of our thinking, and I think was very specific about peak rates and the likelihood of a rate cut this year. I would like to think that Chair Powell wouldn't come out and say that unless he felt some real conviction behind it. Is that fair?
Yeah, it's funny because over the last month you've heard a variety of Fed officials say, "Oh, we're not close to cutting rates. We don't want to do anything premature. You know, we're going to be very, very patient." And then the tone of Powell last week was much more dovish, you know, compared to your typical Fed president. And he said, "We're not far from cutting rates. I mean, that is in the near future." And that, you know, we need to see a little bit more evidence. It doesn't sound like a lot of evidence, a little bit more, which could be just another couple good inflation reports, which all kind of set up the idea that, you know, maybe June would be the month in which the Fed would finally cut.
Yeah, it's like Fed Chair Jay Powell putting a ring on it. It almost felt like. Treasury auctions this week, Liz. We've got new Treasury supply continuing to come into the market. We had a 3-year note auction today. It's a combined $61 billion in 10 and 30-year debt through auctions on Tuesday and Wednesday. The interest and demand of those auctions, right, are really important to watch in terms of giving us clues about what traders and investors think about where rates are going.
Yeah, exactly. And today, which is a completely different bird, the 3-year, much shorter duration, but we did see the category of class of bidders that are mostly investors bid a lot. So that was good. So, but to jump into 10s and 30s is kind of different. So I think, you know, we'll get that 8:30 data beforehand, the CPI. So if that comes in at or below expectations, maybe that will make investors feel like, you know, everyone wants to kind of lock in these yields. Sometimes that works short term, but long term investors keep saying, hey, I'm going to be happy if I'm getting a coupon at over 4%. We may not have that again. So that's been kind of buttressing these auctions for demand. But yeah, if the CPI is hot, you're going to have a really long-term conviction and to buy into those 10s. I mean, you'll get what they call concession, right? I assume rates would probably move up higher tomorrow if CPI is hot. Maybe that will stoke some more demand. But yeah, I'm interested to see how the 10s and 30s go this week.
Hey, Steve, very briefly, how do members of the Fed watch those auctions?
They are interested in them, but it is, you know, what they're mainly looking at is what's happening with employment, what's happening with inflation.
The dual mandate,
they
you're
look
saying?
at the dual mandate. They're really focused closely on those. Plus, if there's any kind of financial shock, they're definitely worried about financial stability. And, you know, they're probably more interested in what's happening with New York Community Bank than they are with what's happening with auctions. They're interested in, are there any kind of vulnerabilities in the financial markets?
Right. Jay Powell got a lot of questions about the financial community, certainly last week. Guys, you're the best. Liz McCormick, I'm waiting for the Bloomberg big take on your brother and the Ferraris, because you know it will be a most read.
I'm sorry, Liz.
We're waiting for it. All right, Liz McCormick is Bloomberg News chief correspondent for global macro markets, joining us in New Jersey. And of course, Bloomberg News economics reporter Steve Matthews out there in our Atlanta bureau. All right, still ahead, Super Tuesday for the bond market, not so super year for Boeing. So who wins instead? That story's next.
Wall Street. We do check markets all day long at Bloomberg. We are looking at a mixed market now with the Dow Jones Industrial Average little changed, actually just turning lower right now, down 0.01%. We've got the S&P 500 index lower by 8, drop there of 0.2%, while NASDAQ is down 40, a decline of 0.2%. 10-year at 4.10% with a 2-year 4.53%. Traders finding little encouragement to keep pushing the stock market higher at the start of a week that will bring the latest inflation numbers before the Fed's decision. We've got spot gold, little changed as well, down 51 cents the ounce to 21.78. West Texas Intermediate crude down 0.2%, 77.84 a barrel. Bitcoin surging 4.6%. Bitcoin now at 72,634. MicroStrategy shares are rallying almost 14% right now. MicroStrategy bought another 12,000 Bitcoin for $821 million, the second largest purchase by the enterprise software maker since it began acquiring the cryptocurrency almost 4 years ago. MicroStrategy up now by 14%. Bitcoin is surging by 4.6% to 72,625. Recapping the Dow now higher by 14 points, up less than 0.1%. S&P down 0.1. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Certainly on Charlie's radar and on our radar, we're talking about Boeing. Shares of Boeing once again hitting some turbulence, down more than 3% as we speak, down more than 4% at its lows today, but right now about a 3.2% loss. This is after the U.S. Justice Department opened a criminal investigation into the mid-air blowout of a fuselage panel on a 737 MAX 9 in January, something we've been talking about when it comes to Boeing all year.
And just yesterday, U.S. Transportation Secretary Pete Buttigieg said the FAA will rigorously assess Boeing after the blowout of that fuselage. Meantime, the head of Delta Airlines telling Bloomberg on Sunday, Carol, that he expects further delays of the yet-to-be-certified 737 MAX 10 variant.
All right, now Boeing shares for the year, as we said, under pressure. They're down about 30% year-to-date. Meantime, for a little contrast here, folks, the ADRs of Airbus, Tim, they're up about 11% year-to-date.
Well, you bring up Airbus, Carol, because Boeing's stumbles and struggles are an opportunity for its lone major competitor, and that, of course, is Airbus. That is the topic of a story in the current new issue of Bloomberg Business Week. We have Business Week's assistant managing editor, Jim Ellis, joining us here in the studio. Jim, good to see you. Thanks for joining us on this. A great story that's in the current issue of Bloomberg Business Week. To what extent are Boeing's troubles gains for Airbus? Because we know that these airlines, they don't necessarily have a ton of choice when it comes to what they're buying. Their pilots are trained on certain equipment. Their maintenance crew are trained on certain things.
It's to change aircraft makers is a big deal for an airline. But we've gotten to a moment now where there's so much, there's a lot of bad news, there's a lot of questioning about the quality of Boeing's equipment right now, that it comes at a particularly bad time for Boeing simply because a lot of people are starting to think, a lot of airlines are starting to think about the next generation of aircraft. And, you know, a lot of people say, well, you know, things are happening now. Everybody's going to jump and run to Boeing. It's very, run away from Boeing. It's very difficult to do simply because, you know, as you said, your crews are trained on that. And you've made these multi-billion-dollar investments. But what's at stake here is the next generation of planes. What happens is that because in the airline business, you can use a piece of aircraft for decades, you don't make these decisions to change lightly. So instead, it's time to think about the next generation. And so what Airbus is doing now is they're going to have some room to go ahead and say, I'm going to come up with a new plane at a time when Boeing is so, you know, sort of troubled and so consumed with thinking about how can it deal with its quality problems, how can it also deal with its balance sheet problems. I mean, Boeing is in the point right now where it doesn't have a lot of financial flexibility to build a new plane. And so Airbus, however, is probably about a $50 billion advantage over it from a debt standpoint. And so they can move ahead and start planning for the next generation and sort of seal this dominance that they're probably going to have of the aircraft business.
Jim, tell us how fortunes can change. And I love how the story starts. And you guys go back to 1987. If we can all remember back then, it's a while away. But talk about what happened and how that maybe set the stage for where Airbus is today.
Yeah, I mean, what happened is a lot of people thought when Airbus decided to bring out its A320 narrow-body airliner, that people thought, oh, well, what are we going to do that? I mean, we've got the 737. The 737 rules the skies, and they come out with this A320. They have a great party. They have, sort of Prince Charles at that time, or Lady Diana. I mean, it's big deal. Fireworks and everything, and everybody says, that's not going anywhere. You cannot beat them. And at that time, Boeing had 10 times as many 737s popping out than A320s. Fast forward to today, and the A320 has become the best-selling commercial aircraft of all time. I mean, that's a big deal, given that Boeing had commanded that market for so long, and the 737 has been a major player in aircraft for almost a half century.
How much of that is the mistakes and problems that Boeing has had? How much of it is it just folks started to kind of really like the A320 and shift their ordering book?
A lot of it is that the A320 just sort of came in with a lot of innovations that, customers connected with. What they call fly-by-wire, the sort of joystick, sort of all-electronic cockpit, the idea that it was a slightly larger plane, which then set off this whole thing of continually making these planes bigger and bigger and bigger and bigger.
I meure how big my seat is. I don't know about you guys, but I do.
It turned out that they were in the right place at the right time, but they were also extremely, because they didn't have an older model that they were basically just retrofitting, they could think differently. They sort of took it and they ran with it, and now they're in a position to think about the next generation of airplanes that can, fly on sustainable fuel, that can do all sorts of, sort of electronic things in the cockpit, but also can take structures of airliners in a different way. They're planning a plane now for this next generation that has a wing that's shaped like a bird's wing, that can actually change its shape in flight. And also because airports weren't built for these new giant planes that we're building now, they're going to have aircraft with the wingtips that fold up, so you can still put it in the same place, but and then when you pull it away from the onto the tarmac, flip the wings out. They are basically taking advantage of what they have right now. It's a lot of money, as well as not the look of all the stock market saying, oh my God, you're a terrible company, which is what Boeing has to deal with right now.
Well, just like in the late 1980s when Airbus was the upstart against Boeing, now there's another upstart out there that should have what, for practical purposes, is a duopoly between Airbus and Boeing, but may not be forever. Enter what China has.
Comac. China's aircraft company, which a lot of people in the West don't know because it has only so far built planes for Chinese carriers. But the thing to remember is that Chinese carriers have become major purchasers of Western aircraft. Most of the aircraft, flown by the big three Chinese airlines are, Boeing or Airbus. And however, a big percentage of the order books for these American and European companies come from Chinese airlines. Now China has decided it wants to be a player in the aircraft business. It feels like, why are they giving all this money to the West? They want to basically be able to, they want to take that duopoly and make it into a triopoly. And that has got to be a frightening thing for Boeing especially.
Can they pull that off outside of China, in that would regulators in the U.S. and Europe foreseeably approve these airliners? That's
the question. And part of that is safety issue, part of that is just engineering issue, and part of that is a political issue. In the sense that, can China build an aircraft that flies? I mean, they're doing it now. I mean, they're doing it for Chinese airlines, and they finally have gotten a non-Chinese airline, though it's Tibet Air. But then they are also marketing it now to Western aircraft. And they will find some sales there, but the issue becomes one of whether they want to take more of their own carriers and sort of persuade them to buy Chinese. And if they do that, that takes away a lot of the sort of extra stuff in the order books of the Western aircraft makers.
I think what's so interesting, too, is you don't have Airbus coming out and being like, snap, we've got this all down, because A380.
Right. I mean, they understand that you got to be very careful to sort of make fun of somebody else having a problem, because people will just turn it around and say, well, you've screwed up before you made the A380, which sounded like a great plane. passengers loved it. Double decker, it's really cool. The issue was it was too late. It came to the market at a time when people decided, well, when airlines decided, we don't need a 550 seat aircraft to take people back and forth. Instead, we want smaller aircraft that can take people on what they call long, thin routes.
Fuel efficiency.
That's it.
That
And
became a
4
priority.
engines. That plane had 4 engines. That's a lot of fuel. And so instead, 2 engine is what people want in wide bodies nowadays. And so that plane lost money.
That brings us back to the narrow body 737 A320, which is certainly the bulk of the market.
Yeah, that's the workhorse share of the airline market. It's where 80% of the planes go. And so you will either succeed or fail based on how you do in the narrow body market. And the reason that Airbus was able to sustain basically a losing program in the A380, that ended years before they had planned it to end and didn't make any money for them in the long haul, is because they made so much money on the A320, because the narrow body market is the bread and butter of flying. And if they can figure out a way to command the next generation of those and not split that market with Boeing, then they could have dominance of that market for years to come.
At the same time, Boeing can think about its way out of this is to be dominant in that, in kind of the next wave as well, right?
Well,
And
that's
how to grab the talent and the engineers.
That's also the counterintuitive thing. A lot of people say, why should Boeing just say,
I'm done.
I'm done. What maybe Boeing can say, I don't care that I don't really have the money to pursue a program. Maybe I should go ahead and do it now because I don't have that big of an order book. I mean, it's very difficult for Airbus to do anything very quickly simply because it's sold out in its current A320s all the way through this decade, into the next decade. It's so popular.
It's great visibility, but it also kind of handcuffs
It handcuffs you
of their
because
focus.
basically you can't walk away from a winner.
Great stuff, great history into kind of understanding what really is a duopoly when it comes to airplanes. Jim Ellis, as always, we so appreciate it. Assistant Managing Editor at Bloomberg Business Week right here in studio.
Hey, let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hey, Tim. Secretary of State Antony Blinken scheduled to meet with Caribbean leaders in Jamaica as part of an urgent push to try to solve Haiti's spiraling crisis while there's more pressure on Prime Minister Ariel Henry to resign or agree to some sort of transitional council. Co-chair of the Haiti caucus, Sheila Cheriflis McCormick, says the U.S. will continue to push for a transitional government.
For the people of Haiti to feel like this is their actual solution, we have to make sure that not one gang member is giving amnesty.
And the U.S. military has evacuated staff and added security at the U.S. Embassy in Haiti's capital. Top lawmakers on the Senate Intelligence Committee are warning about the greatest U.S. national security risks. Virginia Democrat Mark Warner tells CBS's Face the Nation China remains the biggest challenge.
I believe that TikTok, both controlled by the Chinese Communist Party, both collects data, and as a news source, literally half of young people in America get a lot of their news all from TikTok.
He says China is aiming to control the tech domain and is actively stealing American intellectual property. Democratic Senator Robert Menendez of New Jersey pleading not guilty to revised charges in an expanded bribery case. The judge rejected Menendez's request to delay the May 6th trial in light of the revised indictment, which added obstruction of justice charges. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See? I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo. We can do that. Bingo's my cockapoo. Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
The stock rally taking a breather before tomorrow morning's inflation data. 10-year at 4.11%, the 2-year 4.54%. Spot gold up a little changed right now. We've got spot gold down less than 0.1%, virtually flat on the day. West Texas Intermediate crude also flat on the day, now down just 2 cents a barrel, 77.99. Bitcoin, no big story. Bitcoin now surging by 4.2%, 72,357 on Bitcoin. Oracle will be among the big names after the close of trading today when it reports fiscal third quarter results. Investors do expect to see a stabilization in the company's closely watched cloud infrastructure unit. Ahead of earnings after the bell, Oracle up now by 1.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here on Bloomberg Business Week on radio, TV, YouTube, and Bloomberg Originals. Now, folks, we're pretty much done with the earnings. We had a little bit of names trickling out last week, but you might recall from the earnings wrap-up how Meta is still the king of digital advertising. The social media giant overcame grim expectations for its advertising business, in part due to high spending by China-based advertisers and AI-generated video content. Users on apps such as Facebook and Instagram spend 25% more time watching videos. So it's a thing, Tim.
Ask anyone who uses any of these apps. Of course, it's a thing. Well, companies including Meta Platforms, Amazon, Alphabet, and many more competing big time when it comes to the space. Our next guest has a unique window into the digital ad space. So let's get to the interview. With us is Mark Zagorski, CEO of the publicly held DoubleVerify. It's a $5.5 billion market cap company. It does application software and digital media measurement. Customers of the company, Carol, include a who's who of corporate America. You got Colgate-Palmolive, Ford, Mondelez, Netflix, TikTok, Twitter, and more. That's according to the Bloomberg supply chain function.
Mark, so great to have you here with us. First up, so everyone understands your chief business, kind of lay it out for us, because you do work with a who's who of corporate America.
Yeah, so it's great being here. And as you noted, we work with some of the biggest brands on the planet, and what we do is we help them ensure that their ad spend is delivered in a brand safe environment, that it's actually viewable by a human and it's not fraud. And that those transactions are secure. So think of us as kind of advertising security software, but we see across social, across the open web, across mobile, across connected television. If there's some place that has ads, we're measuring or verifying across it.
How do you know if something is brand safe or not?
So we look at a lot of different factors. So if it's video, we can look at the actual video that's running. We can listen to the audio track and analyze it. We can look at the context or metadata around it. So we basically look at all of the different contextual clues that we see. And we do this in real time, and we're able to report back to our advertisers whether or not their ads are running environments that are aligned with what they want their brand to represent.
A lot, Mark, has been made over the past year or so about what's happened to the company formerly known as Twitter, X, of course, and the way that the content on the platform has changed. Is X to you still considered brand safe?
Really, we look across all the different social platforms, and, we make a call, we categorize content. It's up to our advertisers to determine whether or not that content fits what they consider suitable or safe.
Does it seem like the companies are now saying it's less safe than it previously was?
We have seen more advertisers move away from Twitter than move toward it, or X. But there are still advertisers who are putting a hefty amount of spend against it. It's about really threading that needle. And X has worked with us in a really positive way in saying, let's give the advertisers the tools to be able to slice and dice the content the way they want it.
Well, in terms of platforms that are out there, we mentioned Meta, but you got Alphabet. Where is it that you kind of see clients most likely to put out some kind of digital ad, if you will, and link it to their brand, obviously?
Yeah, so we see social, and I think you just mentioned earlier video. Social video is really eating up the internet right now. About 70% of social engagement now is with video. Short form, things like Reels, YouTube Shorts, TikTok, they're exploding. They're eating up a significant portion of consumer time, as we know, and that means that's where advertisers are going. So, we try to verify all transactions, whether they're open web, social, again, CTV, but we're seeing more and more of those advertiser dollars and, heading towards, short form social video.
Like TikTok?
Yes, yeah, TikTok created the revolution, but Reels and Shorts are really part of it as well now.
But I do wonder, just to
Carol.
follow up, though, on what Tim brought up about some of the concerns around X and whether it's TikTok, between certainly U.S.-China relations, that these companies, increasingly Chinese-based companies, are on regulators and policymakers here in the U.S. on their radar. Do you continue to expect that to kind of play out here? And what does that mean then in terms of some of your clients, where they're going to choose to kind of put their ads?
Yeah, I mean, there's no doubt that advertisers want to be where consumers are, right? And if consumers can't go to one platform, they're going to go to another. Consumers love short form video. So if for some reason a platform loses favor because of government regulations or any other reason, the advertisers are going to chase those consumers. So, the beneficiaries of a TikTok, ban in this country is going to be Facebook and Google, no doubt.
Do you think it's realistic that the U.S. could possibly force ByteDance to divest?
That's a question above my pay grade. I would never want to try to discern what's going on.
But is it on your radar, like this is a real risk to not just to your business, but to the space?
I mean, I think, for the first time, this is probably getting a bit more serious than it has been in the past. Advertisers are pretty nimble, though. If anything happens on one platform, the beauty of digital is they can move very quickly to another platform. I mean, they're looking for engagement, and they're looking for deep engagement, and social video provides that no matter where it is.
Where's the best engagement right now?
We don't look at kind of time spent on each platform, but we know where dollars are being spent, and dollars are being spent, pretty heavily across all the three that I mentioned in short form video. So across Reels, across YouTube Shorts, and across TikTok right now.
So another way to ask that question is who's struggling right now? Where's the money not going?
I think you're seeing more and more dollars move away from open web into more walled gardens, more social, into retail media networks, which are really benefiting right now. So, powered by folks like Amazon, Walmart, Kroger, Macy's. This is an entirely new emerging area where advertisers, love the data that those retail media networks produce, and they're able to see kind of a really strong closed loop performance environment.
What's top of mind as we get ready for the November election cycle? I mean, it's off and running, and we know it's underway. And I mean, I'm curious about what is the balance, if there is one, among a company.
People are engaged. People are engaged with political content. There's no doubt about it. However, there's definitely topics that they don't want to be associated with. And, as we saw a 22% increase for relevant content altogether.
Yeah, it's complicated. Hey, listen, Mark, I feel like we covered a lot of ground, but also scratched the surface in some ways. So hopefully you'll come back soon. Mark Zagorski, CEO of the publicly held company Double Verify. Stock, by the way, down about 12% so far year to date, but trending a little bit higher in today's session. Hey, still to come, the latest beverage offering with $1 billion valuation. There's another one, everybody. We've got the details in our One More Thing.
Will join MasterCard, including a role on its executive leadership team on April 15th, focusing on building out the company's commercial partnerships with governments and public sector institutions. Today, we're looking at shares of MasterCard. They're down by 0.1%. Delta Airlines says it expects deliveries of its Boeing 737 MAX 10 aircraft could be pushed out to as late as 2027 as the troubled plane maker undergoes federal safety and criminal reviews. Today, Boeing shares, they are down by 3.3%. Analysts at Evercore say Tesla is likely years away from fully ramping up a new lower-cost model, which will take the company longer than Wall Street is assuming. Those analysts spoke after touring the carmaker's Texas factory. Right now, Tesla shares, they are gaining today. They're up by 1.9%. And those are some of the top company stories for you at this hour. And this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week on this Monday afternoon. Let's get a check on the latest world and national news. For that, we go to Amy Morris in the Bloomberg 99.1 Newsroom in D.C. Hey, Amy.
Hi, Tim. As lawmakers continue to work on a budget for the current fiscal year, President Biden has released his aspirational budget for the coming fiscal year. The $7.3 trillion budget calls for major new spending initiatives to lower costs for health care, child care, and housing, and new taxes on the wealthy and major corporations to help pay for it. India has successfully conducted its first test flight of a domestically developed missile that can carry multiple warheads. Bloomberg's Karen Moscow has more.
In a post on the social media site X, India Prime Minister Narendra Modi said the missile is equipped with multiple independently targetable re-entry vehicles. India has been developing its medium and long-range missile systems since the 1990s as its strategic competition with China grows. In 2021, it successfully tested a nuclear-capable intercontinental ballistic missile with a range of 3,125 miles that's believed to be capable of targeting nearly all of China. India is also able to strike anywhere in neighboring Pakistan. Karen Moscow, Bloomberg Radio.
Democratic Senator Robert Menendez of New Jersey has pleaded not guilty to revised charges in an expanded bribery case. The judge rejected Menendez's request to delay the May 6th trial in light of the revised indictment. It added obstruction of justice charges. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Let's go back to Bloomberg Business Week with Carol and Tim.
All right, Amy Morris, thank you so much. Well, now to our one more thing this hour. And so once again, we have another beverage company that is valued at more than $1 billion.
Okay, here's an idea.
Yeah.
Okay. You get water, you put it in a can, you make it metal, and you raise money valuing the company at $1.4 billion.
I feel like this has been done before, no?
Yeah, but this company has been so successful. I mean, it's a case study in brilliant marketing, no
Liquid
question.
Death.
Liquid Death is the company we're talking about. To be fair, it's not just water anymore.
No, it isn't anymore.
They've got some iced teas, some flavored waters.
Yep.
But I remember when this first came out a few years ago, I mean, it was kind of just really funny, and that's how they wanted it to be. The slogan was "Murder Your Thirst." I think it still is. And it's funny. It's increasingly sold at big venues where they sell alcohol, and if you want a water, you're buying a big can of Liquid Death, and you're paying a lot of money for it, and you're drinking it.
So here's the deal, guys. It's LA-based. It raised new capital that values the startup at $1.4 billion. That is double its $700 million valuation back in 2022. Here's some of the distribution or strategic investors, if you will. Actor Josh Brolin, the NFL, Live Nation Entertainment. They sell the product at its concert venues. And then there's a couple of it sounds like VC partners, Siro Capital Science Inc. and Gray's Creek Capital Partners. They also participate in this latest funding round.
All right, the company attributes much of its sales growth to its marketing. It's got 7.9 million followers across both TikTok and Instagram.
I wonder what it costs to acquire people.
It's amazing. I think
is
it's
their
such a
biggest
fascinating space because it's literally a commodity, right? So you're going somewhere and you're buying a water, which is something that's free available across the United States when you turn on the tap. So
remember what I said in the newsroom? I remember Penn and Teller years ago doing this like fun little show, and they did this skit of people at a restaurant in New York and basically giving them the water menu and having them order it, and then out in the back there were folks just with a garden hose filling plastic bottles all the same, and people were like, yeah, I like this one, it's fruitier, or like it was crazy.
You know what I'll say?
It's just funny.
It doesn't get any better than New York tap water.
Exactly.
Truly.
No, that's why the pizza's so good.
Why the pizza's so good.
I'm not saying anything about Liquid Death. There you go. We love our beverages, but it's just kind of interesting. All right, for those of you staying on TV, coming up next is The Close. For those of you on Bloomberg Business Week, a lot coming your way, including the latest on the market trade as we get ready for CPI.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we're just 60 minutes away from the closing bell on this Monday, March 11th. We are Bloomberg Business Week. Carol Masser along with Tim Stenevec. You got stocks, kind of a mixed trade here, but off our worst levels of the session. Again, as we say, key focal points this week are tomorrow's inflation print, and then I'm kind of even looking into next week when we get our next Fed meeting.
Yeah, Wednesday, March 20th. That's when we hear from Fed Chair Jay Powell. Of course, the board meeting on Tuesday that week, but it's not too early to start thinking about that. Carol, in just a minute, we're going to hear from John Rogers, founder, chairman, and co-CEO and CIO of the first Black-owned mutual fund company in the U.S.
Yeah, great guest, and see what he has to say about the environment and other initiatives, if you will. Also, would you put your trust in AI, artificial intelligence, to help with brain surgery? Would you?
No, not yet.
Not yet.
Yeah.
So maybe in the future.
Is it evidence-based? Is it backed by randomized clinical trials?
So many questions.
Yeah, lots of questions.
And there's a race on to be AI dominant around the world, so we're going to get into that. Also, the SEC did a very significant vote recently.
Yeah, they voted to approve the highly anticipated climate disclosure requirements for public companies. The question that a lot of people have is, did they go far enough?
All right, so we're going to dig into that. Also, we're going to get into some fertility clinics in Alabama have resumed offering IVF treatments. But we're going to get into kind of the bigger, broader business, understand why this is, yes, certainly a very big personal story and for individuals around the United States, but it's also a big business story. So we're going to tackle that one as well.
Hey, first up, let's get an update on today's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. 58 minutes to go ahead of the closing bell. And just reminding you, it takes AI to spell brain. We have got the Dow trading higher, up 37 right now, up 0.1%. S&P, NASDAQ, they are both trading lower right now. 3-point drop in the S&P to 5120, drop there of 0.1%. We've got NASDAQ down 33, a drop there of 0.2%. Bottom line here, U.S. stocks trading mixed. Traders are finding little encouragement to keep pushing the stock market higher at the start of a week that will bring the last inflation numbers before the Fed's decision. Complete coverage tomorrow morning, 8:30 a.m. Wall Street time, when that CPI number drops on Bloomberg Radio. 10-year at 4.09%. We do have the 2-year right now, 4.53%. Spot gold is little changed, higher by 0.1%, $21.81 the ounce, while West Texas Intermediate crude up 0.1%, $78.08 a barrel on WTI. Bitcoin, major story today, up 4.5%. Bitcoin, 72,000. New high on Bitcoin, 72,540 right now on Bitcoin. A key CPI report tomorrow, an inflation report that will test the resolve of a bull market riding on bets that the Fed is moving closer to a pivot to easier policy. Kelsey Barrow is Executive Director for Fixed Income at JP Morgan Investment Management, and she's got this advice.
I would stay focused on your conviction about the trend. And for us, we do feel that the trend for inflation is still one of moderation and one of disinflation over time. And I think that the jobs report on Friday really emphasized this, particularly the wage data.
And you can hear more of the conversation on the Talks podcast, recapping stocks mixed, S&P down 3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Great market setup with less than an hour to go. Let's get to our Abigail Doolittle for a little bit more on the trade today. She's Bloomberg News markets reporter here in our Bloomberg Interactive Broker studio. I said it was a little bit of a boring day, a little bit of a snoozer, but help me set the record straight. What
Don't
is
hold
notable?
back, Carol.
Yeah, I don't disagree with you, Carol, although we're not supposed to say that.
I
But
know.
it is a story when that's the case. What I would say is there's been some volatility today. Earlier at the lows, the S&P 500 down more than 0.5%, the NASDAQ 100 down about, I think, 0.7 to 0.8% at the lows. Now, both of those indexes down just slightly. So coming off those lows, although if the losses hold, it will be a 2-day loss for both of these indexes. It's interesting. I was just looking. I think that the biggest events that we're thinking ahead toward is CPI tomorrow, and then the following week, the Fed. But there are actually some earnings to come out, too, that might give some data points in terms of the consumer. We have Kohl's coming out. ADM is ahead. I think Dollar Tree, so it's Dollar General. So there's Dick's Sporting Goods. So there's some more retail.
We're not
names.
quite,
some
not
idea
quite
that
done
Yeah.
yet.
Yeah, and actually Oracle tonight after the bell. So that can shape the trade a little bit too.
So, Abigail, I know calling the top or the bottom is absolutely a fool's errand. But,
Agreed. Having tried to do it.
yeah, everybody's tried. But what are some signs that you're looking at from a technical perspective about kind of where we are in the trade?
Well, I continue to watch this bearish divergence that we've been talking about for some time, and basically that means that on the S&P 500, out of the October lows, we've had more and more all-time highs. Meanwhile, as the RSI or the momentum indicator is putting in lower highs, so that just tells us that the buying, while it's impressive and the gains are impressive, the animal spirits that we're seeing in Bitcoin, per se, that enthusiasm is not there. Although the momentum on Bitcoin is interesting too, because while it did spike sharply higher, it hasn't gotten all the way back to its all-time high. So a bit of a bearish divergence there too. Weaker hands buying, I would say, both cases.
Did you see the story about Buffett's sale, 1% sale of Apple Holdings, a warning sign for the slump ahead, and just kind of say how it could be a bad omen for Apple this year? I don't know. I know we talk about Apple a lot.
Yeah, we do. I'm sorry, I didn't hear I have not seen that story.
I guess Warren Buffett's company filing mid-February said it had just sold over 1% of its holdings in Apple last quarter, and it says when Berkshire last sold the stock between 2019 and 2020, the selling persisted for several quarters. Analyst revenue outlook for this quarter and next is grim. I don't know if it's coinciding or what.
No, I mean, that's what we've been talking about. Yeah. You know, like in terms of that 13F that came out and the selling pressure that we've just seen day after day. But today is an exception. In fact, Tim and I were talking about it earlier today.
This is the benefit of sitting next to Abigail.
I know.
Well, it's the benefit of me sitting next to you guys.
We constantly are listening.
Up, you know, more than 1%. Is it a bottom? You know, yes, to Tim's point, that's a fool's errand. It is toward the support area or bouncing off the support area of a range. Might that hold? It may, but the longer term charts look a little bit more bearish. So I wouldn't be surprised to see if that's selling. How you were saying it was weak. I mean, it has been for weeks now since it started in the last quarter. Today, it feels like there's probably a pause from that just consistent selling pressure. But I wouldn't be surprised if we see more to come in the future, whether that's Berkshire Hathaway or someone else.
Apple shares now down 10% this year.
Yeah, in a correction.
Contrast, right?
Yeah, off the lows. But when you put that, when you hold that next to the S&P 500, which is higher,
right?
I mean, at one point, the divide from Apple's all-time high back in December, it was basically an 18% divide. Like that's just not going to hold as the second largest member. So the question is Apple going to climb up and meet the S&P 500, or is Apple going to become a smaller member weighting, or is the S&P 500 going to follow Apple?
One thing I want to ask you about, I think it was something I saw in the Markets Live blog earlier today, but just this whole idea that when we're talking about, you know, whether you put money into bonds where, you know, you can get a pretty significant yield versus what is the S&P 500 yield, right? And I just wonder if you're thinking a little bit about that, right? Because it's not, you don't think about an asset class kind of in a vacuum, if you will, right? It's always kind of the earnings yield on the S&P versus what you could yield by moving into the Treasury market. And so...
Yes, absolutely. And I'm rushing to pull up a chart to see what the S&P 500's yield is right now, if I'm going to see it. So the S&P 500 real earning yield, if this chart will be correct, let's see. It looks like, is this correct? Oh, this is not, that's not exactly it.
But the whole idea, like if we're topping out in yields, right? Like it made a lot of sense because you could get a decent yield, some security, right? Maybe not a risk-off trade. But now if we're starting to top out, especially if we're thinking the Fed, as Jay Powell seemed to indicate, we're going to start cutting rates, like maybe you start to think about a little bit more about the yield in terms of the equity play.
Well, here's something interesting. So both of these charts that I've pulled up, I guess the first thought that comes to mind as you're talking about this is that presidential years historically are good years to be in both stocks and bonds.
Interesting.
So, you know, a nice 60-40 portfolio. That's one thought that comes to mind. But in terms of the 2-year yield right now, yielding 4.53, or you can get, you know, a 3-month CD for 5%, one of which I'm thinking about taking advantage of. I'm looking at the S&P 500 real earnings yield right now, less headline CPI, and it's 1%. So bonds are,
attractive, right?
Yes, from that standpoint, and that's a pretty wide spread for quite some time. Whereas if you go back to the pandemic days, the the yield on the S&P 500 less CPI minus 4%. At that time, we had, like a 1% yield. So it was still a pretty wide spread, but you had the S&P 500 absolutely on fire. Not to say it's not right now, it's still higher, but that's a really interesting idea. But yeah, again, the first thought that comes to mind is that both of these asset classes historically do pretty well in presidential years. So the death of the 60-40 portfolio that everybody's been singing for quite some time may not be the case.
Good to know. All right, Abigail, thank you so much. As always, you're smiling.
I'm smiling because Jess Men's got this great story out about the magazine cover curse. Okay, so check it out on the Bloomberg terminal.
So true.
Because over the weekend, Barron's came out with one. The Economist came out with one. In the past, it's been a contrarian indicator.
It's so true, right? When everybody's kind of piling on that you got to do it, the big cover story blow up. All right, Abigail, thank you so much. All right, everybody, right now from our Bloomberg News Chicago Bureau, we want to move over to our Romaine Bostic in a simulcast with John Rogers of Ariel Investments. Let's listen in.
Yeah, thank you. I'm here in Chicago with John Rogers. He is the co-founder, co-CEO of Ariel Investments. John, pleased to have you here.
Great to be here.
Your firm started, 41 years ago, has always sort of had this ethos of patience, of stock selection, of value. Where do you find that in this environment?
Well, as you know, our logo is a turtle, so we really are patient investors. And we're finding our values in a couple of different places. One of our favorite areas is the healthcare area. We have a company in Vista that's a great dental manufacturer and helps people, make sure they keep their teeth healthy. It's an extraordinary brand, a real moat around it. Other favorite healthcare companies, Adtalem. They are the largest provider, for-profit education schools for nurses, doctors, and veterinarians. Really, it's, as you know, there's a shortage of nurses, a shortage of doctors, shortage of vets. Adtalem is extremely well positioned to do really well, less than 10 times earnings. Great CEO, Stephen Beard. So healthcare has been an area for us. Another area is just the sports-related, entertainment-related companies.
Well, let's talk about sports, because when you look at the ethos of this company, the idea of patience, I think nowhere was that more representative, at least in recent years, than your investment in Manchester United, the soccer club. You still have a pretty sizable stake in that, though I know it's down from what it was. But there are a lot of people who questioned that investment at the time. What gave you the confidence to stick by that?
Well, we think professional sports is a great, great place to be. And Manchester United has one of the best brands in the world. And more with the technology, and you'll be able to watch games on your phone at a moment's notice, whatever's happening around the world. We think Manchester United is especially well positioned because of its strong brand. It's hard to replicate that. It would just take forever to be able to do that. Now, the stock has not performed well. They put themselves up for sale. They had a partial sale, and so stock was sold at 33. We were able to sell a significant amount of our stock at higher prices. Now it's drifted lower. Because people presume that there won't be another sale for quite a while.
Do you think there will be a sale?
We don't think so right now. We think it'll take a while for everything to settle down, but we know there's real value at 33, and the stock at under $15 here recently. You're buying the stock at a 50% discount to what we think the private market value, and we know that the company's worth $33. So we think if you're patient, to your point, you can buy it today at less than 15, and 5, 6, 10 years from now, be able to get full value for it going into the future.
You mentioned other stocks in the sports and entertainment area. You've also been involved with Madison Square Garden, and I guess partly through the spinoff, you ended up as an investor in Sphere.
Yes. I mean, we love all three parts of the Dolan empire. There is a Dolan discount, which we think is overdone. We think that's given an opportunity to invest
because of who he is, or at least the perception of who he is.
The perception, because he's done extraordinary things. Madison Square Garden is the world's greatest arena. It's iconic.
You're saying that sitting here in Chicago with the United Center in the background, but go on.
Well, it's true, but there's no comparison to the Madison Square Garden. It is a truly special place, and right in the downtown of New York City. And they executed a refurbishment more than 10 years ago that was done very, very well. It's exceedingly profitable. They do own the Chicago Theater. They own the Rockettes show, the Christmas Spectacular at Radio City Music Hall. So Madison Square Garden Entertainment's a great business. We think 20 years from now it will still be there. People watching concerts, watching games. Madison Square Garden Sports, where you can actually own the teams, the Knicks and the Rangers. Two iconic brands, both selling at less than 50% of we think the value of those businesses. So when you look at Madison Square Garden Sports, we think you're going to get If you're willing to be patient, you'll be able to get full value over time. And then, as you mentioned, the sphere.
What's the ballast, though, there? Because, I mean, on one hand, when you look at sports and what you would make from ticket sales, that can't be it. That's not enough of a business, is it? I mean, I know Dolan has done a good job. I mean, you mentioned, what was it, the Christmas show or something like that, where he has done a good job with intellectual property and basically seizing, or at least holding on to the rights to certain things that I would think would give currency down the road.
Well, I think in both the businesses that I mentioned, there are opportunities, there are hidden opportunities. So Madison Square Garden itself, one, gaming is going to be very helpful to them as more and more people gamble, and you'll be able to have a sports book inside the garden, like we're going to have here at the United Center. You also, because they love the garden, there's a lot of value there. Whenever they renovate Penn Station, we should be really beneficiaries of that because we own the rights to that airspace. When it comes to the sports teams themselves, it takes a long time sometimes, but television, that's where it's really kept them generating all the cash flow. Seats are important, sponsorships are important, naming rights are important, but what the major networks pay and now the streamers are paying for that sports content, because people want to see live sports. And it's the one thing you don't record and watch later. You watch it live.
Absolutely.
So it's so valuable.
What's the future of that, though? Because the demand is certainly there, but the mechanism for delivering that, as you know, has become a lot more fractured. I mean, what is the future of television? Last time I checked, Ariel still had an investment in Paramount, which is obviously going through a lot right now, trying to figure out what its future is going to be.
We understand there are a lot of challenges with linear television, and the traditional bundle has, of course, completely fallen apart. But we still think that Sumner Redstone was right. The content is king. So if you're Paramount Global and you own the rights to CSI and The Godfather and Mission Impossible, and you've got the NFL and the Super Bowl and the Grammys and all these extraordinary brands that are there, all the active, 60 Minutes and CBS Sunday Morning and all the different things that you can watch, we think that content will be valuable however you end up getting it, whether it's through streaming, whether it's on your phone, streamed onto your phone, you're going to be in a great, great position. So we think content will still win out, whether it's sports or entertainment, whatever types of content that's there. And we think Paramount Global has the best content. And
do they have the management to actually execute on that vision? The idea, they have the great content, but as you know, it's been an underperforming stock, primarily because it is still very fractured, and who knows, maybe you end up with new management once Sherry Redstone finds a buyer. How confident are you that she can pull that off?
Well, we think that Bob Bakish has done an excellent job under an enormous amount of pressure. He used to run Europe, and he's great at understanding the international values there. I think Sherry's going to do what's right for shareholders and understands that it's what's right for her family. If you're going to sell that company for its maximum value, you're just not going to sell the part that she owns, but you're going to want to sell the entire enterprise where you'll get the synergies and the benefits. And there are so many large technology companies as well as traditional media companies it would be natural to want to buy Paramount Global. And you can get it for such a, we think it's really selling at a significant undervaluation here. And there's so much negativity around it. Everyone hates it. And you remember the great John Templeton always used to say you want to buy when there's maximum pessimism. Clearly in broadcast television now there's a maximum amount of pessimism, which we think creates opportunity. As a value investor, as a contrarian investor, we love this.
Do you see a future of, I guess, traditional linear TV, or do you think all of this is going to migrate to a more streaming, sort of evergreen type of format?
I think eventually over the next couple of decades, it'll get moved over to a streaming. But the nice thing, again, there's going to be all kinds of creative ways that you'll be able to access content, on your iPad, on your computer, on your phone, and there'll be ways to be able to sell advertising in all kinds of different types of ways, and you'll be able to just get what you need when you want it. I think ultimately it's going to, if you have the right content, it'll be monetized in a very profitable way. I think that's really important.
Do you or your folks, do you talk to the board and the management at Paramount from time to time? You have a pretty sizable stake, 4.5%, I think, as of the end of last year.
I'm not exactly sure the percentage that we own now, but we've actually been buying stock as it was making new lows the last few weeks.
I saw that.
Seeing that we think there are bargains there. We've happened to know, we've had a couple meetings with management in the last several months that have given us confidence that they are on top of their game. We've talked to board members and others and tried to make sure that they're going to be doing what's right for shareholders, and have come come back convinced that they understand they have a responsibility to all shareholders, not just Sherry. And I think that's something that maybe is not well understood on the street, that people think there could be a deal that would be Sherry friendly and not be friendly for everyone else.
Right.
But as I talk to my friends like Mario Gabelli and others, we have confidence that the management of the company will do the right thing for shareholders.
With the strategy, though, that you guys take at Ariel, is it more advantageous for, say, to be on that board, or with your current situation where you just have a sizable stake? I assume, given the stake, they'll take your call any day.
When we have size, we always have taken sizable stakes as small, mid-sized value specialists. We would never go on a board of a company that we own stock in at Ariel. It would really tie your hands to be able to move in and out when you need to be. But we try to act like an independent shareholder would, or independent director would, by giving management our best thinking, and not in a confrontational way, but in a collaborative and constructive way. Have you thought of this? Have you thought of that? Here are things we're hearing. Here are things that we think can be helpful to you. So we want to be a part of that management team's advice-giving teammates.
It's interesting to go look through the holdings at Ariel, because you do get some real insight into not just the strategies that you need those, but where you maybe see the buck going. I thought it was interesting, one of your largest holdings right now is a Jones Lang LaSalle, JLL, big commercial real estate company, at a time where commercial real estate is really hurting.
It has been a very difficult time. As we know, all of our offices, so many offices now are, people are going 3 or 4 times a week. It's just not like it used to be. But JLL has diversified dramatically. So they're not only just doing leasing, they're doing sales. They outsource real estate for large corporations, will take care of all their real estate needs. And they're global. So people maybe are not back in downtown America everywhere. But that's not to say that over in Europe that people aren't back, or over in Asia that people are not back. And the fact that JLL has become a global enterprise, we think it's really helped to balance out the risks and challenges that have happened here because of COVID.
So can that, for other companies out there in the commercial real estate space, can that diversification that you see at JLL, could that be the model that maybe helps some of these companies weather the storm?
Well, I think the big guys are the ones that will be able to weather the storm the best. CBRE competes with JLL. They are the 2 largest by far. There are a couple of others that are, have scale, but the vast majority there are locally focused.